unorganized, listed, unlisted, all that. Let's forget all that. Okay. Look at the GST collections. The GST collections is growing at a slower pace than the nominal rate of GDP given by the first
We have that chart. We'll just pull it out and play it for our viewers. Okay. Go on.
The second part of it is that, when we say that 61% is the consumption as part of the GDP, I'm a little mystified. And when I saw this data yesterday, I was wondering whether the share of consumption has gone up or whether the share of other segments of the industry, agriculture have come down. Because the share of GDP is a sort of relative picture. So when you say that consumption as part of the GDP has gone to 61%, I would wonder whether the contribution of industry, agriculture, services has come down. We do know that until the first half of the year, agriculture was larger than manufacturing in the GDP data. So without going into that, look at all the data, all the stock market reactions, the reactions of what's happening in the credit growth. So private companies, the top 10 companies are sitting on over 7 lakh crores of cash. Why are they not investing if consumption is growing?
That's a very important question.
Yeah, I mean,
some of the companies are, and I think Arvind Subramanian made the point that the national champions are, and the others are getting toughed out because they are worried that they may not have an equal playing field. That's an important question. We'll get into that in just a moment. I want to get in a word from Dinesh Kanabar, Chief Executive at Dhruva Advisors. We also have Manoj Gaur, he's the Chairman and Managing Director of Gaur's Group, the real estate company, and is Chairperson this year of CREDAI. Let me go across to Dinesh Kanabar first. He's a top tax advisor. And, all jargon aside, given the fact that the Prime Minister indicated that Lakshmi ji will shine on the middle class and on the poor, everyone's now trying to decode what can that potentially mean, Mr. Kanabar?
So if you see the overall tax collection, and I was just listening to the comment that the GST growth has been less than the GDP growth, which I agree with. But overall, the tax collections have been fairly robust. And where are they coming from? So there has been a huge increase on account of securities transaction tax, which is borne out by the buoyant capital markets, the IPOs that have happened, etc. And there's a lot more collection from individuals compared to corporates. So the government has a pot of gold, so to say, available to it. And the question is that are we looking at raising the threshold limit for taxation? The government is trying to push everybody towards the new tax regime, which is a right thing to do, with which I totally agree, that rather than have exemptions and whatever else, which are artificial in nature, let people make investments in the right manner. And therefore, how is it the government can increase the threshold? Can it lower the rates of tax up to income of, say, 15 lakhs of rupees? Because when that happens, what happens, Rahul, is that a lot more money is available to people who have a propensity to spend it. And therefore, that gives boost to consumption, that gives boost to GST collection and everything else. So it's high time that the government looks at all of it. And then there is this whole question regarding capital expenditure. And everybody mentioned about how capital expenditure needs to go up. And the one recommendation which has been made to the government is that there was a scheme which got aborted a couple of years ago, which was a lower tax for new manufacturing companies at 15%. And maybe that needs to be revived, because if we are looking at huge amount of investment coming into chip manufacture and whatever else.
But I'm not sure, because, no, one second, can I counter you, Mr. Kanabar, to say that the government reduced corporate taxes substantially a few years ago, and that didn't lead to a virtuous investment cycle. A lot of these companies pocketed the extra profits, their balance sheets look much greener and cleaner, their debt levels have come down. It didn't translate into higher salaries for the working class, and therefore if it just leads to higher profits, I don't see how that's a solution, because the government, it's not as if it's not being tried. It's an idea which in principle seems appealing, but in the last 6 years we haven't seen it play out in the way that you're suggesting.
Rahul, you yourself answered that a little while ago, and I think I would agree with that point to say that no company would want to sit on idle cash. If they saw that the investment was yielding an opportunity, they will all want to make an investment. The question is, are they seeing an opportunity out there? I've heard this over and over again, and I do to an extent empathize with this point which is being made, that neither have salaries gone up nor has capital happened, and therefore companies are wanting profits. No company would like to keep idle cash. No company would want to say that there is an opportunity available for me to grow, but I will not grow. It doesn't work that way. So if people are not investing, it is because they are not seeing that opportunity, number one. And number two, when I'm talking of new manufacturing companies, here we are rolling out PLIs to go back and say that you make large scale investments. Now look at what did Trump say at the World Economic
No, but I want to counter you again, Mr. Kanabar, because what you're saying again seems logical, that no company want to sit in idle cash because that's not a productive use of the asset. But the fact is that that's the way it's been. Capacity utilization has been in the mid-70s for a very long while. We're seeing sectoral increases in capacity expansion, but it's not all across. So therefore, despite the situation, and it's not been this way for a few quarters, it's now been this way for a few years. So you've been sitting on that cash. Capacity utilization, which in economic books is in the mid-70s, which would suggest that it should lead to a further expansion cycle. That's not happening. So we've been, the question is, how do you break out of the current logjam that you're in?
And that's what I was making, that it's really not just one or the other. So first is really, are we increasing consumption? And I spoke about how increasing the threshold limit and reducing the rates of taxes up to 15 lakhs is going to leave some more money in the hands of people who have a propensity to spend. And therefore, the money goes in, consumption revives. And just going back, and I was making this point earlier on, Rahul, that I was hearing President Trump talk to World Economic Forum, and he was mentioning that multinationals, you are free to manufacture elsewhere and import into USA, and I'm going to impose tariff on you. Otherwise, you make in USA, and I'm going to give you a rate of tax of 15%. Now, this is what if USA is doing, will India not have to counter it? If we have to invite investment here, and we have to tell people
but we've
that
already reduced corporate taxes so substantially. Surely you're not advocating a further reduction, because it also happens in the political realm. The likes of Rahul Gandhi, Mamta Banerjee, they'll be hammer and tongs. आपने अपने अमीर दोस्तों को दे दिया, अब आप और उनको कर रहे हो. There's a very strong political consequence of your suggestion.
Yeah, Rahul, I am not saying that reduce the corporate tax. That's not what I meant at all. Today, we have two rates of tax, a 25 and a 30%, depending on whether or not you are opting for incentives. If you are opting for incentives, you pay a higher rate of tax, otherwise you pay a 25. There was a scheme for a period of 6 years, which was for new manufacturing undertakings, new manufacturing companies. And I'm seeing revival of that, because one of the stated objectives of the government is manufacturing in India. And that's all that I'm saying. I'm not saying reduce across the board. I'm saying you want to make large-scale investments. And you could actually do it sector-wise. You may not make it all across. You may come back and say that for investments above a particular amount, say if investment is more than 10,000 crores of rupees, and you are generating more than X number of jobs, then you are entitled to a lower rate of tax. But all that I'm saying is you have to provide a level playing field to people.
That's an interesting suggestion. Let's see whether, and especially given what Donald Trump is doing, whether the Prime Minister and his Finance Minister feel inclined to do the same thing in India. Dinesh Kanabar for joining us. Thank you. I want to go across to Manoj Gaur at the Gaur Group, chairperson of CRIDAI. When it comes to demand in the real estate sector, do you think there are any practical suggestions that you have for Finance Minister Sitharaman which could potentially spur demand in different kinds of real estate?
Real estate. I'm audible.
I hear you well, Manoj. Go on.
Especially with the real estate, a middle income group is increasing day by day. एंड गवर्नमेंट का जो एम्फेसिस रहा है वो ईडब्ल्यूएस के लिए बहुत ही सक्सेसफुल प्रोग्राम चलाया और करोड्स एंड करोड्स ऑफ हाउसेस फॉर ईडब्ल्यूएस इज ऑलरेडी जो है अंडर कंस्ट्रक्शन एंड डिलीवर्ड. बट एक लार्ज जैसे जैसे इकोनॉमिक ग्रो कर रही है स्पेशली आफ्टर कोविड द लार्ज चंक ऑफ द मिडिल इनकम ग्रुप इज इंक्रीजिंग एंड फॉर दैट आई थिंक लास्ट 2-3 years almost silent for that. All the schemes are withdrawn. CLS, the interest subsidies, भी वो भी gone हो गई है. The tax incentive for the affordable housing. I think a need to emphasis on the affordable housing. और इस बजट के अंदर जिस तरह से इकोनॉमिक ग्रो कर रही है, जिस तरह से प्रधानमंत्री जी ने भी जो है कहा है कि मिडिल इनकम ग्रुप के ऊपर या उसके ऊपर लक्ष्मी की कृपा रहेगी, तो आई थिंक एक स्मार्ट वे टू इंक्रीज द इकोनॉमिक ग्रोथ. जितनी भी डेवलप्ड नेशंस की अगर आप इकोनॉमिक ग्रोथ देखें उसके अंदर जो जीडीपी में जो कंट्रीब्यूशन है रियल एस्टेट का, दैट इज अराउंड 15 to 20%. ओवर द कई सालों तक, चाहे चाइना की बात करें या यूएसए की बात करें, स्टिल इंडिया के अंदर जो जीडीपी कंट्रीब्यूशन है रियल एस्टेट का, वो अभी 8%, 10% से नीचे है। आई थिंक उसको इंक्रीज करने की जो है बहुत ज्यादा जरूरत है। और अफोर्डेबल हाउसिंग की जो डेफिनेशन है 2017 के बाद इंक्रीज नहीं हुई है, सारी स्कीम्स जो है वो विड्रॉ हो गई हैं उसके अंदर, तो उसको एक इम्फेसिस करने की बहुत जरूरत है, क्योंकि बिल्कुल ईडब्ल्यूएस कैटेगरी एंड हायर कैटेगरी के अंदर अवेलेबिलिटी है, लेकिन मिडिल के अंदर जो सबसे ज्यादा जरूरत है, वहां पर डिमांड बढ़ाने की जरूरत है, चाहे वो टैक्सेशन है, चाहे जीएसटी के रिफॉर्म्स हैं, क्योंकि जीएसटी के अंदर आपका जो है 18
Okay.
टू 28% जो है टैक्सेस है, 5% जो है कस्टमर को देना था, नो इनपुट क्रेडिट है। तो कहीं ना कहीं कॉस्ट को रैशनलाइज करके जो है उस सेगमेंट के ऊपर ध्यान देने की बहुत जरूरत है, जो कि आज की रिक्वायरमेंट है।
Manoj ji, for joining us, thank you very much. The stuff being finance minister, Rajiv, because everybody's got very particular exemptions, rebates, or incentives which they expect. That's Finance Minister Sitaraman leaving from her residence this morning. But the problem is the government's larger hope was that you rationalize tax rates and do away with these incentives. You know, move to the new tax regime, as it were. And now you're in this bind where, you know, if you do that, then, you know, for example, if you reduce taxation on new manufacturing units, can you spur manufacturing at a time when Donald Trump seems to be doing that and doing it very blatantly?
So I believe to give a boost to manufacturing, we would need to keep working on other factor reforms as well, factor market reforms. So in particular, land, labor and capital. So land largely now it is being handled at the state level by the proactive state governments. On capital in particular, I think the credit markets in the country need a serious revamp, and that comes back to lending regulations set by the central bank. Because to create and scale up a large manufacturing sector, we need like credit availability. And today credit availability is very difficult, particularly for the medium and small enterprises who are expected to become large enterprises. And that's when the manufacturing share in GDP will grow from the approximately 15% level to the 20-25% level, when the small become the medium and the medium become the large. And without availability of credit, that is not going to happen. So the bond markets, the credit markets in the country need to be revamped. I don't think we are doing sufficiently enough to achieve that level of growth that we all want.
Right now we have a situation where the large are becoming the super large are becoming the, you know, super duper large, and you've got a lot of people in the middle and the bottom who aren't necessarily growing, and that's really, again, a challenge that Finance Minister Sitaraman will need to deal with. I'm slipping into a very quick break. We've got lots of very interesting voices cutting across sectors joining us as we try and make sense of what is required to get the economy to grow faster. We'll also look at what the Finance Minister does. We'll be meeting key newsmakers. So all of that continues when we come back on the other side of a very quick break. Still, it's back to home.
Motorola Razr 50 Ultra comes with Google Gemini.
Hi, I am AI anchor Sana, bringing the top headlines for you, presented by Motorola. Modi 3.0's first full budget to be presented today, middle class hopes for relief. Vice President Jagdeep Dhankhar to take holy dip in Sangam today, diplomats from 73 countries to join Mahakumbh celebrations. Major setback for Aam Aadmi Party ahead of Delhi elections, 7 MLAs resign from party.
इस सत्र में हमेशा की तरह कई ऐतिहासिक बिल पर सदन को चर्चा होगी और व्यापक मंथन के साथ वो राष्ट्र की ताकत बढ़ाने का काम करने वाला कानून बनेंगे।
Make your media plan smarter with India Today Live TV on your connected devices. Amplify your brand with 100 million smart internet viewers. To advertise, mail us at sales@aajtak.com. Make your media plan smarter with India Today Live TV on your connected devices. Amplify your brand with 100 million smart internet viewers. To advertise, mail us at sales@aajtak.com.
पूरे देश ने महामहिम राष्ट्रपति को सतर्कता के साथ और पूरे ध्यान के साथ सुना है और उसे सराहा भी है। किंतु दुखद है कि थोड़ी देर पहले माननीय सोनिया गांधी जी, जो कि पूर्व अध्यक्षा है कांग्रेस पार्टी की और कांग्रेस पार्टी की सर्वोच्च नेता है, जिस प्रकार का कमेंट उन्होंने महामहिम राष्ट्रपति के लिए किया है वह बिल्कुल उचित नहीं है।
कभी कांग्रेस को पूरी देश नेशनलिस्ट पार्टी के नाम से या नेशनलिस्ट पार्टी के तरफ पे जो उन्हें तर्जे पर उन्हें जाना जाता था, लेकिन जब से राहुल गांधी जी ने अपना दायित्व लिया है तब से उन्हें जो सलाह देने वाले लोग हैं सारे जेएनयू से एक्सट्रीम लेफ्ट वाले लोग हैं। और इसी के कारण जिस तरीके की कांग्रेस की जो नीति आई है यानी कांग्रेस के जो भाषण आ रहे हैं और उनके जो स्पीचेज आ रहे हैं, सारे देश के जो इंस्टीट्यूशंस हैं यानी पद है उनको अपमान करने वाला, और एक आदिवासी समाज की बेटी जो भारत का नंबर 1 सिटीजन बना, उनके भाषण को लेकर इस तरीके का बात करना, ये मुझे लगता है कांग्रेस जैसे पार्टी से एक्सपेक्टेड नहीं है।
144 साल में तो हुई माहौल में एक बहुत दुखद घटना हुई जो हम सब लोगों के लिए बहुत पीड़ाजनक है। उस पर सरकार जांच बिठा चुकी है। उस पर राजनीति करना, किसी के परिवार की मौत हुई उस पर मौत पे राजनीति करना, इससे दुखद कुछ नहीं। हम जान रहे मिल्कीपुर का चुनाव, हम ये भी जान रहे 2027 के चुनाव की रोटियां सेकना, कुछ और नहीं था। तो ये तो खोज रहे थे कि कब हो। तो ये बहुत ही गलत बात है और अच्छी बात नहीं है, और इससे जनता को और श्रद्धालुओं को खास बहुत दुख पहुंचाया जा रहा है। इस पर जो राजनीतिकरण हो रहा है।
बजट की बात तो बाद में होगी। ये सत्र और आज का दिन कुंभ में जिन लोगों की जान गई है उनके शांति के लिए जरूर बात रखी जाए। और दूसरा, उत्तर प्रदेश की सरकार, उनके मुख्यमंत्री नैतिक रूप से तो जा चुके हैं, राजनीतिक रूप से कब जाएंगे ये बड़ा सवाल है। जिन लोगों की जान गई है भगदड़ में, सरकार संख्या छिपा रही है, और सरकार इसलिए संख्या छिपा रही है क्योंकि उन्हें मुआवजा न देना पड़े।
Coming in, Finance Minister Nirmala Sitharaman reaching the Finance Ministry. She left her residence a short while earlier. Karishma Sudani joins us from there. It's her 8th successive budget and she's really grown in stature over these 8 years. She, for the large part, still prefers to stay under the radar, low profile, not quite as high profile as the likes of, say, a Chidambaram or a Pranab Mukherjee or even an Arun Jaitley, Karishma. But quietly and asserting herself, she's grown in stature to play a bigger role than she did. And, you know, Chetan Bhutani also joins us from Business Today Television. Chetan, 8 successive budgets for the Finance Minister. You know, she's really creeping in on the likes of Mr. Chidambaram and Pranab Mukherjee in terms of who has the record for the maximum budgets.
Well, absolutely. You know, if we talk about the previous budgets, we see, and you correctly pointed out that, you know, she's actually grown in stature and now she commands a visibility in the union government. Even in the cabinet meetings, we see, you know, Nirmala Sitharaman sitting with quite a stature. And in fact, Narendra Modi government actually had quite a women representation. We saw Sushma Swaraj also as the foreign minister, and of course, Nirmala Sitharaman as the finance minister for many years. She presents now her 8th budget. But now, what really the hope would be, Rahul, is that fact that, you know, the focus on capital expenditure. The government in the past 5 years has spent close to about 54 lakh crore rupees for capital expenditure, and again the hope rises that this budget would be accounting for more allocation for capital expenditure. In fact, in June 2024, we saw Nirmala Sitharaman in fact allocating 11 lakh crore rupees for spending in the capital expenditure, and now what we see for the roads and the railway sector, there would be significant allocations as well. We are expecting the highway sector allocation to be close to about 2.85 lakh crore rupees, and for railways it could touch about 3 lakh odd crore rupees, which marks a significant allocation, because remember, the government and the Ministry of Road Transport and Highways would be developing more and more of greenfield and brownfield projects under the Bharat Mara Pariyojana. In fact, when the railways is concerned, the government could allocate about 3 lakh odd crore rupees, which approximately indicates about 6 to 8% hike in this budget, which is a massive allocation, Rahul, because if the industry has to perform and the capital expenditure needs to be pumped money into the system, we have to have more money coming in from private investments as well. And the government would be, of course, wanting to have more private investors for spending more capex as well.
Chetan Bhutani for joining us. Thank you very much. It's you know, interesting how a lot of pundits are putting so much onus on the government's capital expenditure as being the key driver of India's economic growth, whereas there are other engines of the economy and those too need to be looked at, rather than the government just going out and spending. And ultimately, if you look at the speed at which highways are growing year after year, it's now starting to plateau, because there's only a certain amount of roadway network that can be built up, after which the law of diminishing returns sets in. So you've got Arun Kejriwal joining, and he's a leading market expert. The last couple of days, we've seen the markets bounce back, but over the medium term, we've seen multiple corrections. So Mr. Kejriwal, you know, from the lens of a market operator, what are the key triggers and cues that you'd be looking out for in the finance minister's speech, which you think could help the markets recover? The BSE, for example, at 77,000 currently, go back to 85,000 and beyond.
Rahul, this is probably the first budget that comes to mind where expectations from the market are not too many. I believe this is a great thing. This is a great thing to start off with, because the market has sort of leveled off expectations. The one thing that the market does expect is that disposable income in the hands of the middle class, call it the lower middle class, the middle class, is that it would go up with some sort of personal income tax breaks. This could induce a lot of consumption-based expenditure that happens. Of course, there would be plenty of expenditure happening on the capex side from the government. These two put together could be the growth driver that the market is looking for, from a perspective where you have industry doing well because there is consumption-led expenditure, you have capex happening from the government, and probably that stalling sort of an economy where we are getting a little stuck could be back on track.
Okay. Siddharth Zarabi joins us. Siddharth is the editor of Business Today and our top economic pundit. Siddharth, welcome. Good morning. The Prime Minister spoke of Lakshmi ji shining on the middle class and on the poor. You've been trying to decode what that could potentially mean. So give our viewers a sense of what to expect.
Well, very clearly, I think we could look at that message from the point of view that the kind of growth that we saw last year, it's fallen off sharply, and the economic survey makes it clear that we are perhaps going to be on the lower side of 6.2 and the range that has been given. Therefore, it is imperative that people go out and spend. And to do that, the middle class, which is one of the largest consumers, needs something in their hand to spend more. Will it be the new tax regime or the old tax regime? That's the toss of the coin. But clearly, we need to get consumption going. Otherwise, this...
But it clearly can't be the old tax regime because the government's very clearly nudging people in the direction of the new tax regime.
So, Rahul, you know, how do you make up for this 175 basis points odd decline in growth that's happened year on year? And the outlook is also a bit delicate. And see what's happening. Literally hours before the budget, President Trump has set the tariff ball in motion. He's indicated at pharma, once the markets open, you'll see what will happen to the pharma sector. I believe there's going to be a bit of a hit because he's indicated that he might consider pharma tariffs. So the
no, but the Prime Minister is going to the United States in the second week of February, likely. And before that, if he,
for Modi magic.
No, but if before that he, raises tariffs on Indian pharma companies, that's not good atmospherics before this big Modi-Trump meeting.
That's why a Modi-Trump magic working and a deal happening is the panacea, hopefully. But
Rajiv Mantri, do you think this is just bargaining and negotiating tactics by Trump when he says I'll impose new tariffs on your pharma companies?
So those who want to understand President Donald Trump's approach should read his book, The Art of the Deal. And he's explained it well.
No, but he's
how
up
he
against a Gujarati and deal making is in their DNA. So hopefully we'll have some kind of a deal. Otherwise, the market Shankar could react negatively to that.
So the largest expense in the US debt and deficit story is healthcare. And they want to bring that down because they can't do anything else to anything else there. So this is what they're doing. I mean, the US government is now spending more on interest costs than its defense budget. So they have
a real deficit is on the order of, I think, 10%.
Yeah. So now what they want to do is to sort of cut costs in various places. And I think that there is this, Machiavelli's book has this madman theory that the leader should at times try to look
No, but all
like
the research on Richard Nixon and the madman theory suggests it doesn't really work in the real world.
So it works only in specific instances. From Machiavelli's book, The Prince, you can see this. He specifies
no, but I was reading an international research paper on the madman theory, and the net argument is it doesn't work in terms of tangible outcomes.
So there are 3 papers on Nixon and even the others who have tried this in other countries. It doesn't, but there's nothing to stop Trump from doing it. See, the base fact is they are $27 trillion, they are a market, they want to leverage that scale to get something out. Now, whether they get it out or not, whether Mr. Modi goes there and sort of convinces him that there are other ideas that they could pursue, all of this is possible. I mean, India's game is the generic market. The second part of it, what is I would worry about, is that 70% of the APIs which are used by Indian farmers are all Chinese import. Suppose Trump imposes an origin of product or components tariff, then the whole pharma world, forget about us, Switzerland, everybody, all the big guys will sort of worry.
See that, what else would you expect apart from, say, some moderation on taxation for the middle class? What are the key cues you think viewers should expect?
The biggest thing that this budget should tell us is what is the government's approach, Modi 3.0's approach towards taxing income. 2019 was a big gamble. September 2019, out of budget move where a significant cut on the corporate tax rate was done, hoping that private sector will invest. COVID happened. Now, a couple of years after COVID, 3 years have passed, yet we see private sector investment is not really doing that well. Therefore, I would argue that the government's gamble on corporate, giving away corporate taxes hasn't worked really well. Therefore, that leads the question that the burden of paying tax has shifted to the ordinary individual taxpayer. Can that continue at a time when GST is not yet been rationalized, especially on consumer sensitive items like insurance, for example? You pay a premium every year on a product that you have purchased at one time and you don't know whether you will ever benefit from. It is not just high, I think it is the worst example of services tax being misutilized. That has not been addressed. So what is left to the center? The center should therefore come out and say, in today's day and age, 2025 and to Viksit Bharat in 2047, are we going to keep 3 lakhs as the threshold? Are we saying 15 lakhs for peak rate coming in is the threshold? I think this is the message that is required beyond whatever measures. The new tax regime is fine, but what does it say? It says the government will not put money out of its pocket. It wants you to reduce your exemptions.
Aspect of private investment not picking up. So we have seen a range of many important reforms being executed already, which are productivity enhancing. And Dr. Arvind Virmani had written an excellent paper where he explained how productivity enhancing reforms actually have this J-curve effect, where that reduces the need for investment because the existing asset base actually, you spread it out. So existing assets actually deliver same results or better results, and thus that reduces the need for further investment. One of the quintessential examples of how this played out is the implementation of GST, which has improved the turnover and utilization of truck fleets. So because the truck fleets are doing more business, once India became an integrated market, the truck providers didn't need to acquire more and more trucks.
You know, in a moment from now, I'll show you the results of the C-voter data, which looks at how citizens and voters assess the state of the economy. You know, the pundits have their own assessment, corporates have their own assessment. What do people out on the streets say? And that is quite interesting to look at. The data is quite interesting because it indicates that there is real concern and worry about inflation, there's concern about worry about income prospects and general economic outlook. So we'll do that in a moment. Let me take you through the headlines we're tracking this morning. Modi 3.0, much awaited budget shortly. PM hints at relief for the middle class and the poor. Economic survey pegs India's GDP growth for next fiscal between 6.3 and 6.8%. Finance Minister Sitharaman arrives at the Finance Ministry to present her 8th consecutive budget. Budget Bahi Khata photo opportunity and meet with the President next. India Today decodes Modi government's budget 3.0. Biggest industry voices, sharpest analyses all day long. Canada and China face US tariffs starting today. White House confirms 25% tariffs on Canada and a 10% duty on China. Small plane carrying 6 passengers crashes in Philadelphia. One house and multiple cars charred as fire broke out after the crash. After arguably the longest holiday in television news history, Rajdeep Sardesai is back with us this morning. Rajdeep, welcome.
Thank you.
Kaisi thi bhai, chutti itni lambi aapki?
Well, it wasn't quite a holiday. I've been traveling around this wonderful country of ours, promoting my book, which has been great because, it's now coming out in Hindi. It's in a second edition inside 2 months. So not a bad way to spend 2 months.
Rajdeep puts as much energy in book promotions as Shah Rukh Khan does in promoting his films.
You should. It's a good thing to do. I think it's that's the only way to do it. I mean, I'm learning from Mr. Modi, the art of marketing. You've got to go out there and reach out to people, and that's the way you do politics now. So why not book promotion, which I think is actually intrinsically far more valuable than even films and politics.
Give everyone a context politically for this budget, because you've got the Delhi elections happening just a couple of days from now. And I know that the finance minister and the government's very excited about some announcements which are going to be made in the budget which they think could impact Delhi.
That's right, Rahul. Look at what happened yesterday. Both the Prime Minister in his opening comments to the budget session of Parliament and importantly the President mentioned the middle class time and again. In fact, the President mentioned it 8 times. She didn't mention it once in July or June last year when she gave the President's speech. So clearly the middle class could be a focus. I'm not saying it'll be the sole focus. I think Mr. Modi has over the years shown that he knows that his real audience is the Garib Kisan, the GK. That's the audience he's going to target. But because, not so much because it's, I think, a Delhi election only, Rahul, but I think the general sense, and I'm sure people on this panel who track the economy more rigorously than I would know that this is a budget where the middle class expectations will be perhaps a little higher than in normal times. You've got global headwinds. You've got an economy which is slowing down by all indications. And importantly, you've got a year with no major elections. I mean, that's the big difference between 24 and 25. Mr. Modi has that leeway, the elbow room. There are no excuses now. Actually, I would headline no excuses budget.
Abhi nahi to kabhi nahi.
You see, you have got away with, mentioning COVID, demonetization, the world was slowing for a while. You have no more excuses left. Even some of the global conflicts potentially in this year could come to an end, which is again good news. This is the opportunity. If this opportunity, we mentioned about Rahul Gandhi. In my book, I say Rahul Gandhi's never missed an opportunity to miss an opportunity. I think this is the same thing can be said about Nirmala Sitharaman and the Prime Minister when it comes to budget making. You have missed successive opportunities to miss opportunities. There are no excuses anymore. You've got to kickstart the economy, domestic consumption, private investment. All of this needs to get,
See that we were at Davos and one of the key themes there was that the next 5 years are India's golden period. This is where you capitalize on the opportunity. You've got a stable government. This year there are no major elections. And therefore, if this window is not touched upon to try and push through key reforms, there probably never will be another opportunity of this kind.
Absolutely. And I think the economic survey captured it beautifully with that few words that are now trending since yesterday, which is get out of the way. I think for the government...
That's quite dramatic for a CA to say. I mean, it's not Shankar Iyer saying it, it's the chief economic advisor sitting in government saying it.
For the bureaucracy to get out of the way and to ensure that smaller companies, forget large companies which are benefiting from GST, small and medium companies, dozens and dozens and dozens of regulations, compliances, rules, labor norms, they need to get out of the way. And attached to it, a new deal in terms of reforms. 1991 was a defining moment. A dream budget was a defining moment for India. Can 2025 be that opportunity where a vision is articulated for the next 5 years leading to Viksit Bharat? Otherwise, as the survey said, Rahul, 8% is required. How is that 8% going to happen when if you take the median of 6.5% in this year? It's a massive leapfrog, cannot happen without reforms.
I was reading the Chief Economic Advisor's survey report and I thought he was refreshingly honest and candid. And I think, if even 75% of what he says, 50% of what he says is actually translated into action in this budget, I think it's great news.
But can I point out something, Rajdeep? Last year he spoke of the need for India to review economic ties with China, and at that time, the relationship was very fraught. And I thought, ye to bol rahe hain, but look at the political and look at the military situation. And I think he was prescient in that sense. He made the point, and then ultimately there was a reworking of the equation with China, and that I think is important. So there are important signals there. That is Finance Minister Sitharaman on your screen with a Bahi Khata. Looks quite slick, not that big leather bag we used to see earlier. iPad stroke laptop inside with her new team, Twin Kanta Pandey there. And a brand new team because some of her key secretaries, Siddharth, moved over, one to the RBI, one to the cabinet, one as cabinet secretary.
Well, I think, the budget makers, as we call them here at India Today, Business Today, very clearly are crucial people. But there is a systemic structure, institutional structure, which provides much of the numbers really are just updates. We remember the last such exercise was just 6 months ago. Therefore, beyond the budget numbers, the fiscal projections, tax collection, most of that is baked in. What is really important to watch out for is the policy indication that we will get, and the intent that the government announces of what it will do in terms of reforms over the next 4 years. I think that's the crucial thing to reverse this bit of pessimism that India is going to grow at the slowest pace in the past 4 years. That is the critical point to address at
there
this
are 2
stage.
points to this. Not just are you growing at a slow pace, you're not expecting next year to be much better.
Obviously, and what is happening externally, if you see the Trump tariff wagon rolling around and wreaking havoc all across the world, we cannot escape that, because exports are the way to ensure that capital comes to India and therefore our economy performs.
And I want to show you some very important data, and I want to welcome Karan Bhasin from New York. Ajit Ranade joins us, one of our country's top economists, and this is to do with economic outlook of citizens, voters. This is data by C Voter. They put it out just before the budget, and I'll take you through 3 or 4 very quick data points. And the broad perspective to notice is that the mood amongst Indian citizens when it comes to the outlook on the economy is as bad as it was in 2013 before the government changed in 2014. So if you look at, this is the question on, has your quality of life improved in the last 1 year? 25% say it's improved. It used to be much higher. It used to be 42% in 2017. That's now come down. Let's look at those who say it's remained the same or deteriorated. This is C Voter data. Now, these are the people who are saying it's remained the same. So, as I go through different charts, you'll see those who think it's the same is plateauing. But look at the red, which is really the alarm. These are people who are saying their quality of life has got worse. It's deteriorated from last year. That figure is now at 41%. That's higher than it has been since 2013. Now that is complicated. Now let's look at, this is for last year. Now let's look at how people think their economic fortunes are likely to change next year. So what's the outlook for next year? Even if you see this, the prognosis is not very optimistic. The green line indicates those who think their life will get better. In 2015, 72% thought next year will be better than the last year. Now it's only 30%. These are those who think their lives are getting better. Let's look at those who think their lives will stay the same. That again, plateauing. So 35% in 21, 33% now. Not really changing very much. But look at that red line. The red line is those who think their lives will get worse next year. That next year will be tougher. That's now higher than those who think their lives will get better or will stay the same. It's not just this look at inflation. The point that's really coming out through all the charts that we've been studying in this data from C Voter is that people are concerned, which is why, and I think the Prime Minister understood this, which is why he said the Lakshmi Ji is going to shine on the middle class and the poor, because there is an understanding that that core middle class BJP voter who's been so strongly with the Prime Minister and the BJP over the last 10 years, he's now feeling the pinch. The next sheet on inflation coming up on your screen next, which again will give you a sense of whether people are feeling that they're being able to manage their family budgets, or are they struggling to manage their family budgets. So this is opinion on inflation. Have prices gone down? 24% say they've gone down. Have prices gone up? That's coming up in red. And blue is those who think prices will remain the same. Those who think that prices have gone up is now 64%. That's a big jump. Those who say prices remain the same, that's the blue line, which again is now just 12%. So you've got a lot of people, 64%, very worried about inflation. Are they being able to manage their family budgets? Let's take a look at that sheet coming up on your screen next, which really looks at how people feel they're being able to manage their finances or not. Is this inflation having an adverse impact on your life? There's too much of an impact. We're not being able to cope is the voice of 51% of the respondents. There's a little bit of an impact, not very much, is the opinion of 29% of the respondents. Not at all. Like those who are not very concerned, that's only 20%. So a big percentage there thinking that there is just too much impact. A few more sheets, we'll take you through those as well. Shankar Iyer, this is quite alarming because you've got the middle class and those who C Voter has spoken to now more concerned than they've been at any point in time since 2013. That's the key message.
So, if you look at India's growth story, I said this before, the consumption is all about incomes, and there is the inflation picture. What is the major source of inflation in India's homes? is food price inflation. Where does food price inflation reside? In the agriculture sector. What is happening in the agriculture sector is that it is the sector that has been almost untouched by any reform, anything that has to happen. So if you look at the periodic labor force survey, there are more people in agriculture today than there were before, about 46%. So 46% of the population is dependent on 1/6 of the national income. So the incomes are down, yields are down, all that. That is one level. Those who are consuming this are now have to pay 9%, over the last 18 months, food price inflation has averaged at 8%. And you are not able to fix that because you haven't done anything in agriculture.
The chief economic advisor makes the argument that the outlook on inflation is now better than it was in the past, that the worst on inflation is behind us. The counter to that is that Trump's tariffs could have an inflationary spiral too.
So Trump's tariffs, whenever they come, however they come, will have a lesser impact than what food price inflation has done to Indian homes. 45 to 50% is the weightage of food in the CPI. And that is this is the thing, that a large part of that onion tomato story that we plays out in elections and all is because you don't have a national grid for perishables. You have a national grid for milk. Why can't you have a national grid for perishables?
Look at that data. Those who think their lives will get worse, much higher than those who think their lives will be better in the next year.
But we've seen this even in our Mood of the Nation polls. You've by and large seen in the last couple of years. This is a post-COVID phenomenon. If you look at post-COVID, stagnant incomes, inflation holding at 8%. The truth of the matter is, as a result, consumption levels have declined, savings have increased, but people are still suffering somewhere a post-COVID depression, if I may call it. That confidence has not returned. That is the reality on the ground, which we've been running away. It doesn't mean that Mr. Modi is not electable. You see, the problem is politicians look at their performance from the prism of, am I getting elected in the next election? There is a disjunction at the moment between electability and whether I believe my quality of life has improved or not.
No, but
I think that's the problem.
Okay. But Rajdeep, that electability has been buffered by over 4 lakh crores of subsidies, 2 lakh crores going to Ladki Bahan, whatever name that you give. Without that support, would they have? Jharkhand government came back on that.
No, but the fact is that's now a trend across every state. Yeah. Look at what Delhi is promising. Yeah. Every woman in Delhi is being promised higher and higher amounts. So, that is not the point I'm making. Rahul said that, Delhi elections in a week. Let's separate Delhi elections a week from now from what is going to happen today. B-Day and election day are two completely different issues.
But the BJP doesn't think so. I have reason to believe that the BJP thinks that there are announcements in that budget which will have a positive impact on the Delhi voters. That's what they're saying. Now, what they do and whether it does or not is a different matter.
Rahul, even there, if that is their logic, it's a BJP still gets 37-38% of the vote, even in state election in Delhi. In, of course, Lok Sabha, they got more than 50%. But 37-38% is their core middle-class voter. In fact, the voter they need to attract and reach out to is the poorer voter living on the margins.
Okay, the markets have just opened. See that quite flat this morning. The Nifty up 13 points, 0.06% up. The BSE Sensex 77,582 points. That's just 67 points up. Last couple of days, the markets recovered from some of their lows. But over the last few weeks, the markets have been trending downwards.
In fact, this week has been interesting. A 3-week decline was reversed. This is the first week. And by the way, since we having a 6th day of trade, we have seen through the week markets on recovery mode. After the economic survey and its content around consumption, I think there was a further boost that was provided to market sentiment. But clearly, there's a reversal at this point of time. Treading cautiously, waiting for the final speech and announcement, and we'll see the real reaction play out post the budget. But clearly, from a market's point of view, a fillip to growth is what will be one of the key sentiments. But private corporate earnings, and this was another point, Rahul, that we have picked up and discussed yesterday, the economic survey making this very, very telling point. And if you connect it with the Prime Minister's middle class point, I would say the government is telling corporate India that your profits have gone up. Post-COVID, you have enjoyed much higher margins, but you have squeezed your employees. Your wage growth has been not as high as before. And I think that is the central message. If private
No, but what can they do? I mean, the government has been trying to talk up investment from private companies, has been saying, okay, ensure that there's wage growth for your employees. But they're doing what they are. I mean, the government can't really force corporates to give better increments.
I think it's a larger debate around how corporate India, private sector wants to grow its employee base. Look at the debate. Mr. Murthy said 70 hours. Mr. Subramaniam was misquoted around 90 hours. But the bottom line is corporate India wants its young people to work harder. So pay them better.
Can I just ask across this table, because as a small investor,
who's a small investor?
In the markets.
यही problem है राजदीप भी अपने आप को middle class समझते हैं. Now that's really problematic, Rajdeep.
No, we have to define.
No, but you can't think of yourself as being middle class. There's a real problem.
We can have a separate debate on how to define the Indian middle class, because I think that is one of the.
But you don't think you're middle class.
I certainly, my mindset is that of a middle class.
Mindset नहीं wallet से होता है.
What I want to understand, the markets itself. What do you believe, Rajiv, the markets are looking for? And to the extent that because the last 6 to 8 weeks have been so turbulent, do you get a sense that the markets are hoping that the budget will reassure them in some way or the other?
I think what markets would seek is a renewed commitment for reforms. So as long as there are enough signals in the budget that there are going to be continued reforms across the different parameters that we have discussed, we will see that that positive sentiment will return. If
but Punita Sena joins us, and who are better to explain the expectations in the market than Punita. But the fact is, a lot of those reforms can now actually be done by the state governments and not really by the centre. So given that reality, what realistically can Finance Minister Sitharaman do? Both the BSE and the NSE currently in the red, just very moderately, but in the red nonetheless. What can the Finance Minister do to cheer the markets?
Well, the markets only care about taxes, right? So they really don't want any change in long-term, short-term capital gains tax, for one. So as simple as that. But what the Finance Minister can do today is to reassure on the growth side that the economy is going to continue to grow, and all the stress that is happening in the financial sector, in the rural sector, there's some measures to address that. But even then, whatever happens today, the market may react positively or negatively, and that may continue for a week, 2 weeks. But ultimately, the markets are going to react to global cues. And what President Trump does is probably more important than what the budget does today.
So is this a year of volatility? Is that built into it? Given the nature of Trumpism, you know, Trump is not going to change the way he does his politics over the next 12 months. So is it built into it, and therefore a budget can only be a temporary balm at best?
Yes, that's what I said. I think the budget is only a temporary balm because there's so many global factors that are also affecting flows into India, the currency movements. Our exporters are going to be impacted by what President Trump does. So what we can focus on is the domestic economy, and what the finance minister should do is to really reassure that the domestic economy is on track. That's what we can control. What we can't control is the overseas stuff.
So Karan Bhasin is in New York. He's an economist. He's based there. Ajit Ranade joins us. And I have Naveen Raheja, Chairman and Managing Director at Raheja Developers, joining us as well. So let me go across to Karan first. Donald Trump coming out with tariffs coming into impact from today against Canada and against China. 10% against China, 25% against Canada. Why is he more irked with Canada than he is with China, for one? And he's also spoken of tariffs against pharma companies in India. You got Prime Minister Modi going to DC in a couple of weeks from now. So is he going to mar that visit by coming out with this pharma tariff? Or is it really, in your view, a negotiating tactic?
Well, the sentiment at present over here looks like, trying to eliminate as much of trade deficit as possible. And naturally, US, of course, trades a lot with Canada. And that's the reason why, long friends have now become bitter enemies, so much so that there was a suggestion to make it another state. So my sense is that the consensus on global trade has shifted a lot. And you would find, in general, tariffs would go up all over the world. And I recall very briefly, there was this deal that was on the cards between India and US, which was also proposed when President Trump was in India. And at that point, of course, we weren't able to close it because US wanted a bigger deal. Luckily, there seems to be a rethink on trade policy that the US has done. So I'm hopeful that when Prime Minister Modi is in the US, they may be able to make some considerable progress and prevent those pharma tariffs from going up. But as I said, in general, you should expect some tariffs to, go up, and that would be the norm going forward. The period of globalization seems to be
Ajit Ranade, in the
over.
way that Minister Piyush Goyal and the Commerce and Industry Ministry have been navigating these trade negotiations, they've been going very slowly and deliberately. Donald Trump is going tuck, tuck, tuck. He's expecting a limited trade deal. Can that actually happen in the couple of weeks? There was a high advanced conversation last time around. It didn't materialize in a trade deal. But in the way that he's coming up with this slew of executive orders, can the Indian government move at that pace? Is that at all probable, possible? Because that's clearly what Trump seems to be expecting.
No, Rahul, I think our track record is that we don't move as fast. And remember that President Trump is actually his reputation is a very transactional guy. So he is looking for quid pro quo. And he's willing to actually give preferential treatment if there is something for the Americans. And therefore, India should actually, I think, stick to the fact that our exports are import intensive, very, very important, whether it's petroleum and diesel, whether it's polished diamonds, even electronics, even iPhone assembly. We are exporting iPhones out of India or mobile phones, but they're import intensive. So any increase in tariffs actually hurts eventually our exports as well. So we have to have a firm commitment towards low and moderate tariffs. Our tariffs have been going up for the last few years consistently, which is not a good trend. The great achievement of the 91 reforms was to substantially bring down tariffs, import tariffs. We cannot reverse that. So I think our commitment to low tariffs should remain. And the deal with Trump is that we have to not aim for a very comprehensive package, but transactional. For example, our software exports to the US is a shining success story. This year we clocked $250 billion. Just two items, Rahul. $250 billion of export of software services and $129 billion of remittances, inward remittances. These together are almost $500 billion. These are the two most important items we must safeguard and nurture.
Siddharth, where are we on that trade deal? Can we pick up the thread from where Gina Raimondo and Piyush Goyal were earlier? Or does it actually need to start from the beginning?
I think from 2014, we had one phase of sort of India not looking at trade deals. Then closer after 2019, we've seen a rethink. I think it's now time for delivery to happen. And clearly, India-US FTA would perhaps provide the right spark from
a broad... But FTA is not on the table. The free trade agreement, it's a limited trade deal which is being spoken about.
Eventually, it has to lead there. There are steps when till you reach there. I think that would be a great part of India's strategy to deal with a world where Mr. Trump, through a tweet a day, will kind of set trade...
No, but remember, in the trade deal that we did with the Europeans, it included a $100 billion commitment on the part of the Europeans to invest in India. So that's Europe committing to invest in India. With Trump, the equation is different. He said, hey, you want me to invest in your country? I'm expecting all of you to invest in my country. So the whole equation and the dynamic is different.
But it'd be interesting to know whether the Modi government has made a significant shift in strategy. Because over 10 years, we've been very slow when it comes to trade deals. Or we've stayed out. We've stayed out even of regional alliances like RCEP. The question therefore...
no, and just as well, Rajdeep.
No, but there are those who say that, look,
if you watch so
one of the criticisms of this government in the past has been that it's been awfully protectionist. Now you've got a situation where you're dealing with a Donald Trump who wants to be, as Ajit Ranade puts, completely transactional. How are you going to deal with a transactional United States with a completely uncertain world when your instincts are protectionist?
Rajdeep, it's a very simple thing. It's like Virat Kohli going out and batting now. He can't function outside the off stump. India can't function on many of its medium enterprises which are not really competitive. The PLI scheme is actually a subsidy to the industry to overcome all the issues. We have a high power cost, high land cost, high capital cost, high compliance cost. The second part of the story is more important. Why are we hesitant to enter any kind of trade deal? Is because we have a huge agricultural sector which needs to be protected, which is at the bottom of the pyramid. So moment you sign a deal with either Canada, UK, Europe or US, you open up, they all want to export their agriculture produce to India. And that is a problematic thing. So every time you have this fits and starts thing, this is not new to India.
So what's the way ahead? What's the way ahead?
You make your domestic economy competitive.
Part as a problem, because the good thing about transactional entities is they tell you what they want. They'll be upfront about it. You can make deals with them.
Let them export Harleys to India. Reduce taxation on Harley Davidson. There's no problem.
The way American corporations are exiting China, I'm sure they would want to enter India. They would want to do business here. And our government can very
So how
well...
do we respond? How should we be responding to a Donald Trump who's going to, over the next 3 months or 4 years, be disruptive? Are we going to how do you counter someone who instinctively is disruptive?
Rajdeep, we cannot overstate the Trump factor. Rajdeep, we should not overstate the Trump factor. I don't think it's possible for Donald Trump in 4 years to reverse 40 years of outsourcing. But the larger point is, Make in India, which is still the Modi government strategy for Atmanirbharta versus Make in America. How does that play off is the bigger question. But if you think Trump is going to sort of suddenly change 40 years of outsourcing, that's not happening. We spoke to many industry leaders in Davos. The GCC story is going to continue in India. It's going to grow even much bigger than what it is currently. Therefore, the focus, I would argue, is what does this government do? What does this budget do for 60% of GDP that comes from personal accounts? See, if you break down your GDP, please understand, 60% personal, 30% that happens on account of private asset formation, capital asset creation, and only 10% for government. The key thing that needs to be watched out is how does the government address that 60%?
So the point that Punita made, that this budget is about you strengthen your domestic economy, then you can deal with the Donald Trump. Otherwise, if you don't have the kind of the structures in place that will strengthen your domestic economy, it makes it that much more easier for Donald Trump.
Let me get a word from Naveen Raheja. Mr. Raheja,
we should do
your expectations from this budget and what you'd like to see the finance minister do, particularly with an eye on trying to boost demand in the real estate sector.
See, let me tell you, real estate sector is a growth driver for any economy, and we have seen that whenever the real estate prices start going up, overall economic thrust comes in the Indian economy, and that same has happened globally as well. Now, going ahead with this, we also know that in our country we have a large population of youngsters who will be now looking at the housing. So what I expect is that recently, whatever we have seen, whatever launches and whatever projects have come, they have come in a higher segment, which 90% of the population is not able to afford. Once again, we are again into the same spiral, which happened during the last almost 50 years. So if we really want a organized growth of the country, we need to address these. And for this, we do need to give some incentives and some hand-holding to the people. I mean, there can be various ways how to handhold this segment, how to incentivize developers. Cost of land has gone so much, it is not possible to bring down the cost of land. The only way is, it is not possible to bring down the cost of even inputs also. There are more than 250 inputs which go into it, not possible. What is possible is that there is some special incentive. It can be by way of reducing GST or giving GST input credit. It can be by way of increasing income tax exemption limit on the interest part. That's from maybe 2 lakhs to 10 lakhs or whatever is possible, so that people get incentivized for purchasing housing. Then to give additional FAR and focus upon redevelopment of the old areas, because buying land and developing is become too much expensive. So FAR is free, vertical development is free, but horizontal development is almost difficult and impossible.
Thank you very much, Mr. Raheja, for joining us. These are live images this morning of the finance minister going and presenting her budget to Union President Draupadi Murmu. And interesting there because Sonia Gandhi yesterday ended up scoring a bit of a self-goal, Rajdeep, saying that poor president. I mean, why, even if that's what you're thinking, why would you say that? That's just the most bizarre thing to say.
I don't want to argue with you, but Rahul, I'm sure your English is a bit better than most. I mean, it's lost in translation. To say poor thing is not something of derision. You see, the problem is our politics is so polarized and so low level now that you're looking to somehow or the other create weapons of mass destruction.
But why call the president a poor thing?
No. Look, she said, that's what I said. You've studied English. I mean, it's not derision, it's sympathetic. I mean, my limited point is that the real issue of our times? You see, the problem is we look at sound bites, you will play it all day on the channel, it will become the subject of debate, another weapon of mass destruction. Let's focus on the state of the economy. Just like the chief economic advisor was honest and candid in his survey, I believe that the president of India was, as usual, painting a rosy picture and not telling us the reality. All these president speeches or governor speeches, frankly, in states are all designed to promote the government of the day. We've got to start becoming honest with the people of this country. We have not been honest for the last 10 years. And as our newsmen, we've got to start telling the truth.
Of course, which is
now, if it's poor thing, say poor thing. What's wrong?
No, why is she a poor thing? Why call the president a poor thing?
Long speech where you're not really telling things as they are. Is it a weapon of mass distraction? I mean, you could argue that, what else would she have said? I feel sorry for her. I mean, she's a politician. Let's be fair to... You see, bashing the Gandhis is a blood sport now. You can bash them for numerous things. Do you bash them for saying, President, poor thing, or Rahul Gandhi saying the speech was boring? Wo to politician bolega. But does that become the topic of a debate? And then the president responds to it and says, I feel hurt. The prime minister goes into a speech. It is classic weapons of mass distraction. The real focus, as should be on this program, should be what are we going to do to revive the animal spirits of this economy. If we can't do that, we must stop making excuses. As I said, your headline should be no excuses budget. The excuses are over. For the last 10 years, Siddharth Zarabi, we have given some excuse or the other to give the government a free pass.
I would like to say that we have seen a number of important reforms being implemented in the last 10 years. I don't think there have been excuses in the last 10 years.
But
especially now that we are talking about labor, we are talking about implementing of labor codes. This was not even discussed 10 years ago.
Where has it happened?
Well,
it's not happened. Every government talks about it.
No, not every government.
Give me the reforms.
Parliament has passed the codes. Parliament has passed the codes. Soon it will be implemented this year. Let's wait for that.
BJP decade average growth is 6%. We need to grow at 8-9%. Tell me, how are we going to do that?
They have set the standard. I'm sure they will live up to it. If they don't, we should counter them. Absolutely. But the point is, the way labor codes have been brought to the center of the debate.
They should be.
Earlier, no one even talked about this subject. So that just shows how the reform bar has been raised, the way expectations have been raised, and obviously, we should hold the government to its own word.
But these kind of reforms, I'm telling you, for 25 years, I mean, this must be my 30th or 31st budget or whatever. And every year there is, so labor has been an issue since the 90s. So when Manmohan Singh's, it was an issue, Arun Jaitley had a committee looking at it, labor laws, when he was law minister. Then UPA came. Manmohan Singh had a new phraseology, national manufacturing competitiveness, which was basically put all the eggs in that thing and say, okay, can we make something out of it? Nothing. He had one of the finest bureaucrats India has produced, V. Krishnamurthy, leading that committee. Nothing happened. Okay. Then this government comes in. 2015, first Piyush Goyal sort of starts off with this idea that, and it was, I think, done in a presentation to Amit Shah when he was party president, that we should reform these laws. So new labor law code was brought in. It was sent to all the states. Then the states had various stories about it. So 2019, that labor code was rewritten. In 2025, the deadline for adopting a draft, not a law, a draft, has been set on March 31st or something. Now, this thing is happening despite the fact that over the last 8-9 years, as Rahul rightly mentioned, that the BJP has been power in 15 of the states. So every time the parliament, this question comes up in parliament and I look at the data on how many states have done or not done, it's very difficult to, because there are some parts that have been accepted, some parts that have not been accepted. So you don't know. I mean,
But Rajiv is right to say that reform intent has been shown.
No,
one doubts. I don't think anyone should doubt the reform intent. Question is, India doesn't live in Delhi, it lives in the states.
Make a point on that.
Yeah.
So, I'm just looking at in the US, for instance, the states there have the freedom to raise their state taxes. They have the freedom to collect revenues. They have they're accountable. They have their own bonds. Here, we are dependent too much on the center, and the country is far bigger than a central can actually oversee. So we need better governance, accountability of the states. And it would be great if we have state budgets being presented and you're giving them the same kind of scrutiny that you're doing.
Because a lot of just one quick point, Rahul, on the point of labor reforms, look at it from the government side. We have had these conversations with people in the government. There is lack of trust on private corporate sector, a private corporate sector that has seen its profits grow quite well, but wage growth they are not doing. I don't think it's easy for the government of the day, considering the politics of a nation, to simply create a situation where the opposition says government is allowing hire and fire in the private sector. There is a gap of trust, and that's why I say private sector investment and the perception that it is creating wage growth is also important. Governments cannot give
and it's not just the center. Punita is right, it's states. I mean, see what happened with the farm laws. How effectively one state of Punjab was able to eventually derail farm laws. And the real challenge is you're going to have state after state with very high debts. Maharashtra, India's powerhouse, is going to have a budget soon with an 8.5 lakh crore debt.
Give the same scrutiny on these budgets as you do at the center.
That's a good
budget.
idea. I'm going to take a very quick break right now. An important point, you must focus as much on state finances and state spending as we do on the union budget, because a lot of the action, a lot of the ability to maneuver actually lies in the states. We're slipping into a quick break right now. We're coming back on the other side of these messages, and we'll take you through what Finance Minister Nirmala Sitharaman does. An interesting piece of trivia. She's wearing a sari designed by Padma Shri awardee Dulari Devi. It's a Madhubani. This is a request from Dulari Devi that she wear this Madhubani sari. So on that piece of trivia, we take a break and I return on the other side of the messages.
Motorola Razr 50 Ultra comes with Google Gemini.
Hi, I am AI anchor Sana, bringing the top headlines for you, presented by Motorola. Modi 3.0's first full budget to be presented today, middle class hopes for relief. Vice President Jagdeep Dhankhar to take holy dip in Sangam today, diplomats from 73 countries to join Mahakumbh celebrations. Major setback for Aam Aadmi Party ahead of Delhi elections, 7 MLAs resign from party.
The poll bugle has sounded. Small state, big heart and bigger political dividends. This is no ordinary election. Delhi doesn't just vote, it challenges. It questions.
Delhi living in a literal virtual gas chamber.
It decides the narrative for the nation.
We are the only revenue surplus government in the country.
As the battle unfolds on the 5th and the verdict echoes on the 8th, we're here to bring it all to you. This is State of War Delhi.
Make your media plan smarter with India Today Live TV on your connected devices. Amplify your brand with 100 million smart internet viewers. To advertise, mail us at sales@aajtak.com. Make your media plan smarter with India Today Live TV on your connected devices. Amplify your brand with 100 million smart internet viewers. To advertise, mail us at sales@aajtak.com. Make your media plan smarter with India Today Live TV on your connected devices. Amplify your brand with 100 million smart internet viewers. To advertise, mail us at sales@aajtak.com.
It's incumbent upon the Prime Minister to expose all these foreign forces which are destabilizing our parliamentary proceedings, particularly in the last 10 years under his watch. He must use every organ of the state which is available to him and every international fora which is available to him to go after these foreign forces which he believes are destabilizing our parliamentary process. I think the Honourable President and I live in two different countries. The President seems to paint a very rosy picture, but has glossed over the stark reality which all citizens face every single day. So it almost appears as if the President and I live in two different countries while we are still within the same sovereign territory of India. The President has all the respect and the regard. We all have respect and regard for her. Yes, it was a long speech which she had to deliver, but we wish her very well.
Make your media plan smarter with India Today Live TV on your connected devices. Amplify your brand with 100 million smart internet viewers. To advertise, mail us at sales@aajtak.com.
Welcome back to our special coverage of arguably what will be the most crucial budget that Nirmala Sitharaman has delivered since she became the finance minister of the country. Her 8th consecutive budget. But given global headwinds as well as the situation back home, this budget presents both an opportunity and a challenge for the finance minister. Will she grab it or will it be squandered? That's been our focus for the last hour as we've been building up to the budget speech. You can see that all the formalities, the ceremonies, the rituals of budget making are taking place. The finance minister meeting with the president, Draupadi Murmu. There will be a cabinet meeting at about 10:25 where the budget is formally adopted. And then, of course, Nirmala Sitharaman's speech starts at 11 a.m. Shankar Iyer, who's seen many a budget, will recall the days when it used to be at 5 p.m. Perhaps life was more difficult then because you had less time to even process the budget before the next day's newspaper. 11 a.m. is a much better time. We moved away from that colonial legacy of 5 p.m.
Well, that was a good thing, and having it earlier also is, I think, a better idea to have it in the 1st of February. I think the time taken to sort of understand the budget remains the same, Rajdeep, because this is like discovery of India. You know, you discover the next day there are things that you didn't discover, and then the whole battalion of chartered accountants goes through the finance bill. I mean, the finance bill has more in it than the entire budget. I mean, all the attention is there on all the commas and full stops and semicolons. And by the time you figure out a good news on the budget day might be terrible news 3 days later or vice versa.
What's been the most landmark budget across the table over the last 25, 30 years? The budget that you think stood out? I mean, we could go back to Manmohan Singh, the former Prime Minister who passed away a month ago, 1991. Will that still remain a benchmark, landmark budget? Or have there been budgets since that you think have broken new ground? This is across the table, Siddharth. Please feel free to give your
my thing would be that events on budget days would be Narasimha Rao dismantling License Raj in 1991, Chidambaram's dream budget, because that was the first attempt to recast the tax slabs, the budget that Yashwant Sinha presented, where he brought in the FRBM and all the trimming of
2003
FEMA as well.
Yeah.
FEMA changes.
And thereafter, maybe the 2007 budget, which was the first ambitious outward-looking budget because we were riding the global growth wave. I think after that, I think GST budget is the 2017 budget where Arun Jaitley got the GST through. That, I think, would be the remark.
You know, I'll say we need to hark back perhaps at this stage to a combination of 1991 and 2007. 1991, in terms of articulating a new reform strategy, the country needs it, 4 decades, and a new strategy on tax. 60%, I repeat this point, of our GDP is by people's spending. If that is not addressed, the other levers can only be pushed to a certain extent. And given the global environment and, you know, export questions, I think this is the strategy to go forward. So if we have both, I think it would be my dream budget today.
If you distill the budget's challenge, it's basically about costs. The cost of governance, why you can't fix the PSU story, why you can't raise more money as asset monetization to pay for investment.
Shankar, I think
the cost of governance.
There is no intent to fix the PSU story. It's the other way. A lot of taxpayer money is now going into reviving PSUs.
No.
This is big governance. There is no minimum government. There is, in fact, maximum government that is playing out on the PSU
That is true,
side.
but you know, there are ways to do this. You don't need to sort of walk into the concept of private ownership. You can have a dispersed public ownership. You can put all the 51+% equity into a sovereign fund, call it the Amrit Kal fund, and list it on as an ETF. Let people subscribe to this. Get government out of that excess of 51%. I mean, this has been, they're talking about it for at least 10 years, 12 years now. There are 4 reports that have come on divestment, none of which will move because there is a genuine fear among all political parties of concentration of wealth and concentration of power. I mean, can this system handle a few more billionaires in the landscape? That is the question that they are wrestling with. So there is that part. So there is cost of governance, cost of living, and cost of business, which is compliance, regulation, all that. So if you put it down, ease of living, ease of governance, ease of business is cost of living, cost of business, cost of governance.
Rajiv, any budget that stands out for you, that you believe over the last 25, 30 years has sort of changed the landscape forever?
No, so the industrial delicensing event which Shankar talked about,
91.
I think, yes, that was obviously historic. It was outside the budget actually. It was announced by the Commerce Minister, who was the Prime Minister. So, which was absolutely transformational, of course. And Shankar also talked about the indirect tax reform that came in. I am hopeful that if we have important direct tax reforms and a new direct tax code, we could have possibly this budget or the next budget based on the commitment given by the government that they'll have a new direct tax code. That could also become one of the important landmark ones if we get a new direct tax code, which has been very long overdue now.
And also look at the disastrous budgets. I mean, retrospective taxation for one.
Pranam Mukherjee.
And the fact that once it happens, everybody kind of loses their tongue and starts praising the budget regardless of how disastrous it's going to be for their pockets, which is why you need incisive and objective commentary of the kind that you're hearing on India Today for people to call a spade a spade. I mean, if something's bad, it should be called out as for being bad. If something's good, it should be appreciated as such. You shouldn't try and spin things as disastrous as retrospective taxation as being, oh, Mr. Mukherjee, what a fantastic job you've done, like we saw at that time. We're slipping into a quick break right now. We'll have more. You're seeing the cavalcade of the finance minister driving out of Rashtrapati Bhavan now to Parliament House, where she will then enter. There'll be a cabinet meeting soon after that. The budget presented before the cabinet. And this is really, Rajdeep's, Nirmala Sitharaman's 8th budget. You know, she's grown in stature. She stayed low-key. She's not flamboyant, trying to, you know, make headlines in the market. She's low-key. But she's grown in stature and confidence in these 8 years.
As you go into a break, let me give you the Nirmala Sitharaman story, which is a story for every politician. I tell this to spokespersons of political parties. Sometime in about 2009-10, I was struggling for a BJP English-speaking guest. And one of my colleagues comes and says, sir, there is this lady who's willing to come to the studio. Why don't you try her out? I had never heard of her. And we were pretty desperate. It was 7 p.m. in the evening. I said, chalo, bula lo. She came to the studio, as always in a sari, spoke very well, well prepared. And the next you know is that she's just going up and up. And dare I say, a star is born.
So all these people, I think the moral of the story is if Rajdeep calls you late at night, whether it's at that time Narendra Modi or it's Nirmala Sitharaman, they've got Rajdeep stays where he is. Those people grow up in life.
Absolutely. But you know, look, let's be fair to Nirmala Sitharaman. She has stayed the course. I mean, politics is about staying the course. And she's done it. She's been defense minister and finance minister.
And commerce minister.
And commerce minister of this country. And I recall once meeting her in Ahmedabad 2012. We were staying in the same hotel, and at that time she was planning to write a biography of Prime Minister Modi. So that too can be on your CV if you're planning to write a biography of someone who becomes a future Prime Minister.
It was a biography of Vajpayee, actually.
You know, Vijay Kedia joins us. He's tracking the markets very closely, leading market expert. Kedia ji, welcome. Last time you were singing for the finance minister. What's your song this morning?
Same song, same record will be repeated, Rahul ji. Because I don't think so far I got any indication that...
You want a new speech from the finance minister, you are singing your old song?
नहीं, उसी का एक modified रूप है, एक FMG, इतने टैक्स में कैसे भरूं?
अच्छे से गा के सुनाओ, ये मजा नहीं आया, आप थोड़ा सा अपने अंदाज में गा के सुनाओ तो थोड़ा सा, there's too many numbers and data, let's hear some music.
So last time you gave me this opportunity to sing in front of Nirmala ji, you know, that was a really, you know, great achievement on my part. So maybe next time also I will get such an opportunity. And the song is like this, ki, FMG, itne tax mein kaise bharun? STT, STG, LTCG बढ़ा क्या कहूँ, ऊपर से डिविडेंड पे दो टैक्स भी पे मैं करूँ. मैडम जी, अब जिंदा मैं कैसे रहूँ?
Someone who heads a securities firm, when he starts saying, "मैं tax कैसे भरूं," then there's a problem. Now we come back to the middle class argument. कि tax कौन भरेगा आखिर में? Kedia ji, you can pay your taxes surely.
Sorry?
I said you have the think of the poor middle class. You're not middle class.
No, it's not the question of middle class and all. And Rajdeep ji, I am not also against taxes and all. I remember when this 10% long-term capital gain tax was raised to 12.5% tax. I had said on a TV channel, okay, this is ultimately it is going to happen, because ultimately, you see, this is very clear in my mind that it is like something like filling one hole by digging another. Okay, this is the whole game. It is going on. So I agree with you. What my point is this: you create. There are three kind of people. One who does not have the income to pay taxes, and there are second category of people who have income but they don't pay taxes. For example, 2 lakh. I read somewhere that 2,40,000 people in India showing income above 1 crore. So that is money. That is what. That is now you can describe this better, Rajdipji, in your own way. That 2,40,000 people showing individual people, showing income above 1 crore. So of course I agree with you. Ultimately, all these things had to be taken care of. Ultimately.
Achha, markets ka outlook batao. Okay, this is just philosophical. What's the outlook in the markets? 186 points up at this moment. The Sensex, as we see these live images of Finance Minister Sitaraman entering the Parliament from Makardwar. Give us your outlook on the markets and the key cues the markets would be looking for if they have to go from the 77,000 to 85,000 plus.
In my limited knowledge, maybe I'm wrong also, Rahulji. I think that that up move of this market, which started after the COVID, is over for the timing. Let me tell you, whatever has happened, in spite of whatever Rajdipji is saying, I was just listening to your interviews on whatever the slowdown in GDP or slowdown in on whatever rate of unemployment and all, market had been going up. I think that era is over for the timing. So I think it will take some time, maybe 3 months or 4 months or 5 months to consolidate, or maybe 6 months to consolidate. So I don't foresee that this market is going to touch 85,000 index so soon.
Interesting. We'll leave it there. Thank you very much, Mr. Kedia, for joining us. Aap gaate raho, bajate raho, and keep giving us all your latest ditties.
The original song, it would have been just as apt. Tu hi re, tere bina kaise jiyo.
Okay, let's take our viewers through the headlines we are tracking this morning. 1 hour to go for the union budget to be presented. Here are our headlines at 10.
Narendra Modi's 3.0 much-awaited budget to be tabled shortly. Prime Minister hints at relief for middle class and the poor. Economic survey pegs India's GDP growth at 6.3 to 6.8% for the next financial year.
Ahead of her 8th budget, Finance Minister Sitaraman meets President Murmu at Rashtrapati Bhavan, hands her a copy of the budget. President Murmu offers dahi chini to the Finance Minister.
India Today decodes Modi Budget 3.0's biggest industry voices, sharpest minds. Join us to get a sense of what the budget could hold.
Canada and China face US tariffs starting today. White House confirms 25% tariffs on Canada and 10% duty on China.
Just days after that mid-air crash, now a small plane carrying 6 passengers crashes in Philadelphia. One house and multiple cars are charred as a fire breaks out after the crash.
Razr 50 Ultra comes with Google Gemini.
Hi, I am AI anchor Sana, bringing the top headlines for you, presented by Motorola. Modi 3.0's first full budget to be presented today, middle class hopes for relief. Vice President Jagdeep Dhankar to take holy dip in Sangam today, diplomats from 73 countries to join Mahakumbh celebrations. Major setback for Aam Aadmi Party ahead of Delhi elections, 7 MLAs resign from party.
got less than an hour to go for the budget. What we want to do right now is get in quick reactions from a cross-sector representation. I want to go across to Rashesh Shah, founder of Edelweiss. We've got Pirooz Kambata joining us, group chairperson at Rasna. Let me go across to Rashesh Bhai first, Mr. Shah. You know, from the perspective of financial services and the stock markets, you know, given the fact that the markets have moderated and come down over the last few weeks, you know, what are the cues you think investors would be looking out for, both retail and institutional, for the markets to gather some energy and go back to their highs?
Yeah. Hi, Rahul. Hi, Rajdeep. Hi. Yeah, I think the biggest issue right now, even after the Q3 results we are seeing, is growth. I think it's now almost a given that growth is slowing down in India. And I think picking up growth is going to be an important one. So I saw the economic survey yesterday. And if you're going to aim for 6.3 to 6.8% growth for the coming year, I don't think it's going to excite investors. I think somewhere in the 7 plus, maybe closer to 8% kind of a growth-oriented budget is what we need. And for that, we need to boost consumption. Government will have to again spend on capex because we do think even for the next year, private capex is going to be muted. So government capex, government, cutting off tax, especially for the middle class, rationalizing it, putting money in the hands of the middle class to boost consumption are the two most important things. I don't think investors in the market or even all the corporates are actually looking at will growth come back. So I think the biggest question, if today the finance minister is able to answer, is to convince everybody that growth will come back. She is focused on growth. It is a growth-oriented budget. And she's willing to take risks because obviously without taking risks, she won't be able to get there. So I think not a good time to be very conservative, to even be very moderate on the fiscal spending. But I think this is the time to go a little bit more aggressive, which is what I'm moving.
Okay, you're seeking aggression. Pirooz Kambata, you run Rasna. On the issue of urban consumption, what is it that you're seeing in your numbers and with all the peers that you speak to? And what are your recommendations for what Finance Minister Sitharaman should be doing to try and boost urban consumption?
On the number two, I can easily say that the most important message of the economic survey is that the government should get out of the way. I think let industry do its best and let industry put money where it knows best and let government ease all the regulations and all the environment so that really the startups foster, the MSMEs foster and the established players foster. So that is the first message I expect. That if the economic survey clearly says that this is the real problem, then let the government really have a roadmap towards what I call a real ease of doing business. So I think that is the most important thing which I picked up from the economic survey. Coming to the consumption story, I think honestly speaking, there are a lot of complexities involved. I think number one in our field, what is involved is the high cost of inflation in the agri-commodities. Now that has come in a great way of the costings of almost all products. So obviously, we are a very cost-driven market. So till the costing is correct, the consumer is not going to buy. And now coupling to it the complexities of the GST, and I think I don't want to talk too much about it, we all know about that, that has really made the food products more costlier. Now that is not actually helping consumption in any way, and that's why a GST rationalization, I know it is not part of the budget, that is I think the most important thing to ensure that the prices are stabilized and we get more people to consume healthy processed food. I think that is very important today, the message I would like to give. On the rural side, I definitely believe there has been a stress, and we have seen areas where we have seen that the growth in some parts of the country, the growth is good, some part of the country the growth is very poor. And I think the government needs to put more efforts on agriculture infrastructure to ensure that there is more money in the hands of the rural man so that he can buy more and more goods. And that is definitely something which I like to see in the budget. Third, obviously, everybody is talking of more money in the hands of the middle class by ensuring that the tax slabs become less. And I think I'm always saying that the salary taxpayer is the most honest taxpayer. And I think time has come that we really increase the standard deduction and really reduce the taxes so that he can spend more. And I do expect this budget to really have some clear what I call benefits for the middle class. So that is my broad expectation from today's budget. Having said that, I think one more important thing for growth is the fact that we have to become a manufacturing destination for the world and make for the world. And I do expect some policy announcements to that also.
Firuz Kambata, thank you for joining us. I know that you've got multiple things to do in that last 45 minutes. I won't hold you any longer. But if you look at a lot of the charts that we are putting out through the Budget Intelligence Dashboard, it suggests that a lot of the growth has plateaued, whether it's in, say, GST collections, whether it is in private investment. You know, that really, Rajdeep, is the enormity of the challenge. A very here and now, do or die kind of situation where, unlike earlier, where there was an anticipation that, okay, things will be much better in the future, now suddenly, and the C-voter data reflects that, people aren't so sure.
People aren't so sure, but, you know, given the chief economic advisor's survey yesterday, there were hopeful signs. I mean, he was very clear that possibly the next 9 months could be better than the last 9 months have been. So I think, you know, India is the classic story, Rahul, of glass half full or half empty. Rajiv mentioned the reforms this government has done in the last 10 years. Of course they have. But, you know, you can reform with intent. Execution, the challenges that lie in ensuring that on the ground the bureaucrats buy into your reform measures is a huge challenge. And somewhere there's been a mismatch, therefore, between intent and execution. I think that's going to be the test over the next 9 months. 2024, Rahul, was the year of politics. You had elections not just in India but across the world in more democracies than ever before. 2025 has to be the year of the economy. The countries that manage their economic, this economic dissonance across the world will be the countries, I think, which will be future ready. This is the budget to make us future ready. Mr. Kambata says, apple and pie, first principles. Government has to get out of business. I think Shankar and I have been hearing this for the last 25, 30 years. How many, every time before the budget, this is what industrialists say. After the budget, they'll give 9 or 10 to the finance minister, even though she may not get government out of business.
This is what Chief Minister Narendra Modi at that time had said in 2013 when he came to the India Day conclave just before the general election, that the government has no business of being in business. He wanted small government, but that was talk. In reality, that's not been easy to do, and I think that's the challenge. Punita Sinha runs an international fund. Now, one of the things that we're seeing is that net FDI inflows into India was just $0.8 billion in the first 6 months of this fiscal. And even FPI, portfolio investment, has been, there's been more outflow than inflow on a net basis. How do you see that change? What would foreign investors be looking at from this budget to try and divert some of the money they've taken to economies like the US? And where they put the money was in those magnificent 7 tech stocks. Those now have taken a hit. So there is some potential to bring that money to India. What can Sitharaman do to make it happen?
Well, first of all, as I said earlier, Nirmala Sitharaman can only control the domestic side of the economy, right? And foreign investors, why are they investing in India? For the India consumption story, for the growth. And so to that extent, that growth is stimulated and the growth resumes, and the valuations will start looking better and they will come back. So it's a very rational decision. It's growth versus valuation. Why they were taking money out was because valuations had gotten very frothy and growth was beginning to decelerate. The earnings estimates were coming down, and at the same time, China and other countries, the valuations had become a lot cheaper. And if you see,
but in that sense, foreign investors were smarter than domestic investors who stayed invested also because they didn't have much of a choice. The foreign investors ran with their money.
No, well, it's not even that they were smarter. They had the choice. Sure. The domestic investor didn't have the choice. So what are they supposed to do? Go into cash or gold or real estate? The foreign investors, when you have a choice and you can compare valuation, there's arbitrage opportunities, and that's what you will do. But now the domestic investors also in the last 2 months have slowed down. The SIP data shows there's a slowdown. The gross numbers and the net numbers are showing that even new SIPs are not being created at the same rate. And a lot of speculative, derivative retail investors are also on the sidelines. You ask many people, till about 3 months ago, even a yoga teacher was into the market, a doctor was into the stock market, and now they've gotten burnt recently. So whoever you talk to says, no, I'm on the sideline. So they'll come back if the valuation growth equation and the math works.
Limited point. Yoga teacher, I think, is well trained to be in the stock market or in the derivatives market, given that he can do headstands and all the asanas. I mean, the large part of the story is that what is India's attraction is the scale of the domestic economy, the population, the working age population, and all that. And how do you do
growth?
I mean, the finance ministers over sort of decades have talked about the resilience, about this. So I have a feeling that sometimes governments sort of behave like they're at the airport, at the carousel belt where the luggage arrives. You missed one chance. They say, "वो ठीक है, घूम के आ ही जाएगा, growth आ ही जाएगा, क्या problem है?"
No, it's like Chidambaram in a recent article saying that you don't need government. Indian economy will grow at 5% even without government. If you want to take it from 5 to 8 to 10, that's when you need strong government intervention. Now, you could argue that, once you're in opposition, you can get away with a lot of things that you can't say when you're in government. But either way, I think really these are, I think we've reached a stage, Rahul, after 10 years. Mr. Modi had a long honeymoon period, more than any other prime minister has had, frankly, in recent memory. The honeymoon is over. And I think 2024 in that sense was the wake-up call. 2025 poses fresh challenges because of the global situation, because of domestic considerations. I come back to it, Rahul. There are no excuses left anymore. This is Nirmala Sitharaman's chance to make history. I asked all of you, which was the budget you most remember? And everyone went back to 1991. That tells you a story in a way. That over the last 34 years, barring 2017 was mentioned by some because of GST, someone mentioned 1997 because of Chidambaram's dream budget in terms of tax cuts. But truth of the matter is that just 3 budgets over 34 years.
No, but that would always be the case. I would say that's the first burst of reforms that you have when you are a controlled economy and you're liberalizing. The first few budgets will always be the most highly impactful. That is, but it is a natural outcome of having
that's giving a free pass to many finance ministers and many of their budgets. They've missed opportunities over the years.
But once you've done industrial delicensing, how do you top that? I mean, there can be
you don't do that, but there are other things to do. Surely there are. Agriculture was a big challenge.
So the biggest challenge that no finance minister is able to address is agriculture. If you fix that, if the 16% of GDP becomes, say, 20% of the GDP, that disperses across a much wider population, working age population, whatever. Or if you take industry across. I mean, one sitting duck opportunity for the last 10 years. This government, before it came, had 100 smart cities in its first manifesto. Now, you don't need to build another Calcutta or Mumbai or Delhi. You can build smaller cities. I mean, construction, real estate is at the intersection of the urban and rural economy. So you can create jobs that matter, incomes that matter. So you can create 10 small cities. Every state can create one city. I mean, you have the freight corridor, you have the industrial corridor, you have the SCZ corridor, you have all the opportunity. I mean, what is the issue of the affordable housing is the cost of land. So if you create new cities, the cost of land diminishes. So these are all ideas that have been there in circulation, that have been there in discussion. But the thing is that in India, everything waits for a crisis or one. So I always call that India has next-gen reforms is actually next-generation reforms. Because if you remember, FDI in insurance was opened by Yashwant Sinha and it was expanded by Jayant Sinha. So I call it the Sinha to Sinha reforms. So, this is the truth about India. I mean, you can't run away from it.
So that's the budget I remember.
I think
you said which budget do you remember? I remember my father-in-law's budget, Mr. Yashwant Sinha.
Sure, the 2003 one in particular, where he brought in fiscal responsibility as well.
FDI was seen as a very big reform at that time, right? Now no one talks about it. Similarly, labor is now considered to be like, of course you should do it. I mean,
I remember
these
the
are
number of
ways the
text messages between Murli Devra and Yashwant Sinha. Because Murli Devra was the standing committee of finance head and Yashwant Sinha was the finance minister. The number of SMS messages they exchanged that things are moving, it almost became 49. And then within the BJP, there was opposition, so it went back to 26.
Therefore, given that situation that you say that a crisis sometimes spurs budget makers...
No,
1 minute. A crisis spurs budget makers at times to go ahead with the kind of reforms that are much needed that otherwise would not take place. This is an opportunity. 2025 is as good an opportunity as you have. The government is stable. There are no major elections. You've got, on the other hand, global headwinds and a slowing down of the economy. If you don't do it now, when will you?
I don't know whether it is, we are at the tipping point. Okay, Rajiv. I always believe that crisis is a feel-good factor in India's economy. That's the only time change happens because the choice is wrenched away. But whether we are there, I'm not sure because there are things that, how much more disastrous can agriculture get? How unviable can farming get for you to get there? But it's still not moved.
Perspective on agri, because I've been on an agri chemical board for 10 years. I finished my term. So I've seen all the different efforts that companies are making, that the government is making, but it's a very tough problem to tackle because despite everything, it's, farmers have so many things out of their control. The monsoon still is a very big thing. The climate change is creating a lot of havoc. The insects are eating up the plants. The new insects come up. So even the companies are trying to keep up, with the right chemical to deal with the insect, but a new insect comes up because of climate change. And the weather patterns are creating, crop variations that are required. So it's such a big issue that I think if they should tackle climate change as well.
No, but it is one of the successes. I was reading Harish Damodran, who's probably the country's finest agricultural journalist, and he had an interesting article about how urea has been an investment success story in the last decade. That as many as 6 new plants, a 7th in the pipeline, have been commissioned at a cost of over 60,000 crores since 2019. And all of these in the green revolution state. So there are things happening. So it's not as if it's been a complete, disaster. And the government did try. You recall when it comes to agriculture, it didn't work.
So let's go across to Vineet Mittal. He's at Avada Group. It's a green energy company based out of Mumbai. Mr. Mittal, the government's laid a lot of focus on green energy. The economic survey also talks about the huge dependence in supply chains on China. What do you think the finance minister can do to step up the space of adaptation of green technologies?
So, thank you, Rahul. The biggest challenge, as you rightly put up, that we are still dependent on many other countries to get the solar cell, solar wafer, and many other components in the supply chain. So the government came out with an active policy on PLI, which has led to almost 70,000 megawatt of solar production in India. What is needed now is the component level PLI policy so that glass can be manufactured in India. There are 10 different components which goes into making solar panels like cell and wafer. They should be manufactured in India. So that's what people are seeking from the budget. The biggest challenge the sector is facing is on the faster implementation of transmission line. The renewable energy implementation agencies, they are awarding huge contracts, but they are not getting implemented fast enough because of 2 reasons. That the many states are not complying to the central government regulation of renewable purchase obligation. And second is the CTU is not able to implement transmission line in a timely fashion. And these 2 things are delaying several 100 megawatt of project. In the past 15 years, we have done around 210 gigawatt of green projects, and the projects which are awarded is almost of the similar size. So what is needed to be done is that there is a lot of private investments which is chasing this sector. But because of these 2 reasons that the awarded contracts are not converting into power purchase agreement and transmission lines, particularly in Rajasthan and Gujarat, the one which is developed by central government, is taking longer than it was planned for. So I think if government allocates more funding towards the building the transmission network and comes out with an incentive plan to add more storage into the grid by the state distribution company, those 2 will stabilize the grid and unbottle the sector. So those are the few things, PLI for balance of system for solar, wind, battery storage sector. State.
Okay.
State incentive to the state. Yeah.
Vineet Mittal, thank you very much for joining us with your thoughts ahead of the budget. Just a few minutes to go before Finance Minister Nirmala Sitharaman starts presenting her 8th budget. This was Vineet Mittal from Avada. One of the critical questions, of course, is you have to keep the government on track towards fiscal consolidation. That's something Sitharaman's been very careful about and being very prudent. We saw Rashesh Shah asking for the fiscal purse to be opened. The government's been very, very careful about how they spend. The big debate playing out in Delhi, Shankar Iyer, is about where the money is being spent. Are parties like AAP pushing for a lot more spending on social infra, healthcare, education? The government really big on physical infra.
But, last year they did that Shagun number 11,000 crores, whatever, for capex. And almost 1 lakh crore of that is not spent. So it's not like the government is running out of money. The problem is the execution. The other aspect is the singular achievement of this government is fiscal consolidation, and I hope they don't sort of mess it up. This is really important because India is at that intersection. If they get the growth right, they might just get a ratings upgrade because S&P has put you on positive, and maybe in a year's time, maybe if you get 7+% growth.
Explain to everyone watching what's the advantage with the ratings upgrade.
When the ratings go up, your inflows improve, your new bond debt instrument rate rankings, just like we celebrated the inclusion of India in the JP Morgan index and the Bloomberg index, there could be much more space for India to receive funds. Global funds actually invest on the basis of ratings.
Cost of government borrowing comes down.
Cost of government borrowing comes down. Your currency is much more stronger because the inflows change. Basically, what a rating does is that it changes the flows, the pattern of flows. Now, for that to happen, you have to fix the domestic economy and get that growth above 7+%. And then you might be able to pitch to the rating agencies that you are not dealing us a good hand.
How far do you think, Punita, we are from a ratings upgrade?
No, see, I think on the ratings side, even if we have a ratings upgrade, I'm not, there is a currency adjustment that is going on. And that is more concerning, would be more concerning for foreign investors because while they may get better opportunity to make money in the bond market if the ratings upgrade, but then if the currency weakens, then they lose that. So right now, I think what is very important is what happens to the currency.
No, it's not going to happen now. I mean, there's no chance at 6.5 you will get upgraded. If you pitch 2 successive years or at least 2 quarters or 3 quarters of 7+% growth, then you can actually make a legitimate case before the rating agencies. Just now, your sort of your debt to GDP ratio is 85%. It's like crazy. The Oliver Blanchard's formula is that your debt can be sustained only if your rate of growth is higher than the service payment.
So, but if US investors, you're getting 4.5% in US treasuries, you would rather invest there than invest in India, take the currency weakness, and all you'll get is you'll get less than what you get in the US.
So as of now, AAA rated or even triple B in the US is fetching you 8, 9, 10%.
Yeah.
I mean, you asked in the morning why are corporates sitting on cash? Because it's much more profitable to do treasury operations for all this.
Yeah, AAA corporates or even AA are giving 7.7, 7.5, 7.8. US treasuries are 4.5 plus.
By the time you fix the hedging cost, you're fine.
Devaluation, you make less investing in Indian bonds.
Can I just sort of pivot to what many believe could be the central theme or one of the central themes of the budget, which is the middle class? As we mentioned, the president mentioned it 8 times, the prime minister mentioned it in his opening remarks to the budget session. Now, if I look at the wordplay in the 2024 budget, there was a lot of talk, both in 2024 and 23, Berozgari and youth were central planks. 2023, it was the Kisan. There was a lot of talk about getting farmers their due. How does the middle class get its due? Is it simply standard deduction and, the fact that you get some tax breaks at 10 lakhs and upwards, don't have to, below 10 lakhs, don't pay tax? What is it that you believe will give the middle class? And we can define who is the middle class. Rahul seems to believe that I'm not middle class. I believe I am. I'm not looking at income alone. You're looking at mindsets.
There was a lunch at Sanjay Jha's house. This is the JDU leader. Amit Shah was there. and one senior editor said, "Sir, हम जैसे middle class के लिए क्या होगा?" And Amit Shah turned around and said, "अगर आप middle class हो ना, तो इस देश के नागरिक को सरकार की जरूरत नहीं है. When the citizen doesn't need the government, you can take care of yourself."
I think I know who you're talking about.
So anyway,
we won't mention names.
Rajiv, but it's very clear.
But I'm just asking.
That the middle class needs,
what does the middle class need?
And middle class needs some TLC from this government. This government has taken the middle class vote for granted for too long. Now they're saying, "Boss, apne ko kya mila?" What can the finance minister do?
So, as part of the direct tax reforms, certain type of tax relief, maybe the tax slabs go up in some way. Maybe there is an intermediate rate introduced. I don't know, but some format of reforms in the DTC, ease of taxation, ease of living needs a certain boost. I think one of the real problems is there is an impending kind of cost of living crisis going on because of dearth of supply side reforms. So if we have supply side reforms, increase of businesses providing the certain types of goods and services which the middle class consumes, along with direct tax code coming in, together that will give a very good relief over the next few years.
Because, what's being mentioned is that you'll raise the tax exemption limit up to 10 lakhs an annum. Now, who is middle class? It comes back to who is middle class. You're looking at effectively people, therefore, earning 80 to 85,000 a month who will get the benefit which they are not getting today. But there is a large pool of people who earn more than 10 lakhs, who are also the BJP's core base, who are asking, what am I getting? The RWA, upper middle class. It's that upper middle class which is the most vociferous at the moment, saying, what is in it for me?
So the demonstration effect, you must remember, that political class over the last 2 years has given lots of sops to the bottom of the pyramid. The top of the pyramid in India is the rent reapers. The bottom of the pyramid is the rent seekers. Beech mein phasa hai middle class. So I give you an anecdote to tell you the sense of frustration among the middle class. So I was at a conference of private equity guys. So one of the young guys just perked up and said, "Will there be a cut in income tax?" So I said, "What would satisfy you?" He said, 18%. I said, "That is quite a precise number. How did you arrive at it?" He said, "They are charging me 18% GST on everything I consume. I want an 18% rebate." See, that's the level of frustration among middle class, that the guys who are getting Ladki Behan, this Yojana, that Yojana, everybody who's in the middle class thinks that I am paying for the GST. I am paying, one of the most bizarre things, you rent out your flat where the government has no business to intervene, it gets a service tax. You take a subscription in telecom. I don't know what is the government's contribution exactly to get 18% GST on telephone. So that all these things are now hurting. They're saying that
why is GST rationalization not happening? Everybody knows what to do, but why are we not being able to make
building a consensus in GST Council, bringing all the states on board.
No,
a few holdouts are there.
No, there is a simple thing. This is like Satya Nadella spoke about Jivan's paradox. The Jivan's paradox is anything that becomes efficient becomes overutilized. So here you have the direct benefit transfer. The cash transfer system has become so efficient that states have nearly 8,000 codes registered on the NPCI. So every state, whenever they want to switch on a scheme, they can switch on. The other part of it, GST revenues are very predictable, 1.7, 1.6 lakh crores. So now in the next 3 days, Maharashtra is going to have a strike of all the contractors because contractors haven't been paid 1 lakh crore money because all that money can't be paid and because all the Ladki Behan and all the Yojanas have taken, which is Himachal, Maharashtra, Punjab, Karnataka, all of this.
Karnataka. The point I'm coming to is, for the middle class, it's no longer about tinkering with tax codes. You see, until now you've tinkered. I think 97 stood out as a budget because, to be fair to Mr. Chidambaram, he sort of broke with convention. He went ahead and drastically...
But he raised resources. VDIS was raising resources.
Yeah, no. The point I'm making is that the middle class wants to see something which is far greater than just tinkering with tax, with taxes.
So the taxes are directly linked to consumption. We need to stimulate consumption to improve our growth rate. And the middle class, if you look at, the wealthy people, they have obviously their dividends and coming from the companies that they own, which is taxed at, relatively low rate compared to global levels. The stock market participants have very low tax rates, so they can earn. If you're a salaried employee versus an investor, retail investor who's only focusing on making bulk of your money from investments, you are better off doing that than being a salaried employee. So I think the salaried employee in India is penalized relative to everybody else. The rich people getting dividend income, the investors in the stock market, and the poor getting
for a long time. Now they're saying we need some payback.
This is actually generally true for the real economy, I would say. Because even when you're talking about private investment, I think one of the reasons private investment is also suffering is that a lot of corporate treasuries, let's say family offices, they are taking to financial investment. They're not setting up real businesses anymore. They're not investing in the real business anymore.
Okay. You know, but it's also the psychological impact that Shankar spoke in that anecdote. You know, there are people, you go across Maharashtra to say, you know, you're giving these Ladki Bahin benefits, what's there in it for us? And they're so stark and you're down this slippery slope. Just look at the way the Delhi campaign is being run. It's my freebie versus your freebie. And, you know, we can call some of the freebies welfareism and they should be called welfareism, but a number of them are just straight cash handouts.
Yeah, and the middle class is actually being neglected.
No, not neglected, but they are paying for it also. There's a sense you're paying. And this government has put cess after cess. If you can't put tax, then get a cess in. I mean, I know state governments that are upset over this, saying, look, we are not being, you know, our elbow room for taxes is limited because of GST. Plus the centre gets its revenue through cess. Where do we lie?
Quick break. The middle class is crying, apna time kab aayega? Let's see whether it happens.
Hamara time kab aayega? We are all middle class. Rahul, you must make the case that Rahul Kanwal is middle class.
You know, that's a bizarre, you know, people can see through what's happening. That's a bizarre suggestion for anyone to even remotely think that Rajdeep Sardesai is middle class. It's not, you know, that is not the fact.
No, let's define it financially. More seriously.
You know,
what are we defining the middle class financially? Because otherwise you throw these numbers of, you know, we have a 300, 400 million.
Somebody who predominantly gets their income through salary.
So he gets his income through salary.
Yeah, but it's also the salary that you have. No, if for example, the rebate is for those who are paying,
so give me
who
a,
are getting 7.5 lakh rupees, Rajdeep, per year, not per day, per month, nahi, per
Middle
year.
class is
That is the middle class definition. Rajdeep's looking at daily.
7.5 lakhs per year.
I'm saying that is how 7.5, 10 lakh rupees. That is typically where the rebate is going to come.
And it depends. It's also graduated depending on where one lives. So, for example, 10 lakhs may not be enough to live in a city like Bombay.
So basically defined by the surplus that you have at the end of the month to invest or save or consume or to experience things. That's all. I mean, you know, you could be middle class in Udupi with a decent salary, and with that same salary in Mumbai, you would be bloody
You
poor.
can't live in Mumbai.
But it doesn't matter.
So we'll slip into a break. Our last break before the union budget begins. You're seeing those images of Prime Minister Narendra Modi walking with the Union Minister of State Jitendra Singh. They're all getting set for the budget. The budget's now been passed by the Union Cabinet. We'll have Finance Minister Sitharaman present the budget in a short while from now. Our live coverage continues on the other side of these messages.
Make your media plan smarter with India Today Live TV on your connected devices. Amplify your brand with 100 million smart internet viewers. To advertise, mail us at sales@aajtak.com.
While we were in a break, a debate was raging in our studio about whether corporate employees should be given salary increase. And Punita Sinha was making the point that there's no justification for a 10-12% salary increase. And then we ran out of the break. So I want to continue that argument now to make the point that look at corporate balance sheets, look at corporate profits. If profits have gone up 4 times, you're saying, why do employees deserve a 10-12% increase in their salary in the appraisal cycle? I say, why not? If profits are going up, companies are benefiting, surely they need to pass it on to their employees.
If corporate profits are going up 4x, I don't think anybody's...
corporate profits are up 4x.
No, not at all.
For listed companies, they haven't increased that much.
They've increased maybe 15%, 20%.
There's a report which says that in the last 4 years, corporate profits as an aggregate are up 4x.
I don't think so. How that would mean 400%? That doesn't seem right at all.
So how would you benchmark salaries?
Okay, so salaries should be benchmarked on individual performance, inflation, and the company's performance, and then some benchmarks related to the industry you're in and the overall economy. Now, if the overall economy is growing only at 6-7% real GDP growth, inflation is no more than 5-6%. The nominal GDP is growing at 14-15%. The corporate profits are growing generally in line with that.
Okay, so here it is. Quest Corporation report with FICCI saying profits of Nifty 500 companies grew 4-fold in the past 4 years, were at a 15-year high. Wages in 6 sectors grew in the range of 0.8% to 5.4% in the corresponding post-COVID period. This is Nifty 500.
I don't know.
No, so see the 4-year period, maybe looking at the crash in earnings for the COVID period.
Yeah.
No, but they're looking at it in a
FY
15-year cycle. Looking at it in 15-year cycle. In 15, sir, this is the date, and I don't know why you're taking this position. Corporate profits are up 4x. Wages are going up between 0.8 to 5.4%. I think that's unfair.
So 4x, as you said, is over a longer period. The 0.8 to whatever percent you're giving, 5%
Nifty
is
500
annual.
companies grew 4-fold in the past 4 years in terms of their profits.
But the wages have not grown 5% over 4 years. Wages grow 5 to 6% every year.
No, average wage increase in these 6 sectors are in the range of 0.8% to 5.4%. That's the FICCI report.
Annually.
Annual report.
Yeah. No, annually. One is 4x, one is over 4 years, one is annually.
Correct.
But even so, I don't agree with that 4x number. Maybe smaller cap companies, and as he said,
Nifty 500 data.
Maybe the starting point and the end point. I've been investing in India for years. Indian earnings do not grow more than 20-30% annually. So they cannot become 4x.
They might be looking at the 2020 to 2024 period, which was disrupted due to the COVID period. That's why I agree. It's unlikely that...
Yeah. But anyway, coming back to merit increases and say if an employee's productivity hasn't improved, if the employee's performance is the same and inflation's running at 6%, should the employee just be guaranteed 10, 12%? Why? What's the logic for that? Just unless they are benchmarked to, they're starting off at a low base and they're benchmarked. So for the peers in the same industry outside are getting more, then they should be raised. But if they're not, if they're already at a decent benchmark, average, median, or even in the top 50%, then why should they get more? That should come from bonus and variable compensation and not just fixed. So when people look at salary increases, if you're only looking at fixed, I don't think fixed should keep going up. Even in the US, the fixed salary goes up 2% a year, at most 3%. It's the bonus and the total comp that you have to look at, the long-term incentive, the bonus, the variable. That's where.
I have a figure in a research paper that the Congress party put on when they were questioning the economy. They've said real wages for salaried workers declined 1% annually since 2014. Obviously, this includes the COVID period as well, which is, of course, a period where people suffered huge disruption in their lives. But the truth of the matter is it comes back to the point which Rahul made about quality of life and how people perceive their futures. People are feeling insecure. People are feeling troubled. The question therefore arises, since we look at the budget now, what can the finance minister do to assure this large pool of people who've suffered from stagnant incomes, low savings, and now wonder, I mean, at one stage we want to kickstart consumption. At another level, people feel that they are not so certain that their lives will get better over the next 9 to 12 months. How do you give them confidence? How do you restore a feel-good factor in the economy? Is that the main challenge today that the finance minister faces? How do you restore a sense of Achhe Din? This government came to power promising Achhe Din.
Also, Rajdeep, why is the growth target for next year so muted? Let's assume that you're saying that growth slowed down this year and it slowed down because half the year was spent in the elections, the government couldn't do capital expenditure. Rajiv Mantri, then the question is, shouldn't we set bigger, more daring targets for next year? Why is the government saying, okay, we're 6.4% this year, next year we'll be between 6.3 and 6.8%? Why aren't they aiming for more?
They're being realistic at one level, Rahul.
So it's probably some degree of realism, it's probably some degree of expectation setting. And at the same time, like I said, if the inputs to reforms are there, the growth will follow. So we have to keep the focus on union government level reforms, state government level reforms, make sure that the inputs are all continuously going in.
But what do you do to restore the feel-good factor? I come back to it. The Prime Minister came to power in 2014 promising Achhe Din. For the first 2 years, there was a genuine feel-good factor that Mr. Modi was there out to fix it. As you mentioned, there were important reforms also that were carried on, second-generation reforms for the first 3-4 months. I speak to people in industry who fear that the government has exhausted itself. In fact, one of them actually turned around and said, my recipe is no one should be in leadership positions for more than 10 years. That's why the American system was devised to give you only 8 years as president. After a certain period, you get exhausted and run out of ideas. How does the government, given this kind of backdrop from the same industry who was pushing, who thought this was going to completely transform the economy, how do you restore that sense of confidence in Prime Minister Modi and this government? What is it that this government can do today?
My suggestion would be the same. We continue on the path of reforms. We bring the new direct tax code. We pursue the...
You're saying the new direct tax code today could be, if there is a signal sent out by the finance minister,
the entire
it'll have a very positive impact.
Absolutely, it should.
Yeah,
Punita, you agree with
one
that?
of the challenges of also speaking to industry is Atal Bihari Vajpayee had very famously said, everyone wants reforms in other people's industry but not in their own.
Sure.
Yeah, so I agree with that. Because I think the feel good, if you just want feel good, it's like a cosmetic, right? Your medicine will fix the long term, but short term you put a band-aid. What is the band-aid? I think the band-aid is something on the tax side. That will make people feel good. Oh, I'll get more money in my pocket later on.
So should we be looking at that short-term band-aid, or is this a budget to look at long-term transformational surgical surgery?
Both have to be done. The feel good, you asked about feel good.
Yes.
Feel good is always a short-term
sentiment. And actually, if
the long term, of course, where the feel good will become sustain, will come from a lot of different reforms, maybe slow. But as you said, the government is running out of. It doesn't have so many degrees of freedom.
How does it
And
not have
if we do get a direct tax code, a new direct tax code, I think that will be a very important structural reform. On the same
So
probably
try
plane
and
as a
explain to
indirect
our
tax
viewers,
reform that we
Rajiv,
have
how
seen.
this new direct tax code would be different from the system that's in place at present, and how is it better for our viewers who are watching at this time?
So the way companies and individuals make capital allocation investment decisions is obviously to some degree determined by taxes. The way our tax code is presently written up, there are all kinds of distortions in it. Some of it was corrected in the last budget. Then the indication was given that a new direct tax code will further bring improvements. Because this Income Tax Act was, I believe, is 1961. It's totally out of date.
It's older than me.
So in 2025, where we are looking to take aggregate output from $4 trillion to 10 trillion plus and beyond in the next decade or so, can we continue with the same tax code that we had earlier? And I'm sure Shankar will be able to tell us about how many committees have sat on this over the last 20 years.
How do you, Shankar, how do you restore the feel-good factor in this government, in the economy? I'm not just talking about markets, we're not just talking about markets here, but we're talking overall. How do Rahul's figures about quality of life based on that C-Voter survey saying more Indians feel that their quality of life will worsen over the next year than improve? How do you give them a sense of confidence? I made the point that I think the government at times in the last 9 months seems to have run out of ideas or steam. There were, of course, major elections that took a lot of its energy out leading up to Maharashtra in November. Now they don't even have those elections to worry about. How do you restore the feel-good factor?
I think, Rajdeep, one has to recognize that the election outcomes have given a window to the government on the sense of disquiet among the public about where the economy is heading, what are the steps being done. One of the things that we have done in the past years is there is a sort of rush to celebrate announcements without deadlines. So we have had a lot of announcements about policies, about ideas. I mean, the direct tax code, for instance, starts in 1993 Chellaya committee report, then the NK Singh effort, then the Chidambaram effort, then the Kelkar committee effort, then the Pranab Mukherjee effort, and then the direct tax code started, I think in Arun Jaitley's second budget, there was a mention of it. The direct tax code itself is a feel-good factor, but I think what is necessary is that to recognize is that in India, we have a very strong consensus among the political parties for weak reforms. So all the reforms which upset an entrenched vested class, that reform doesn't get done. So, I mean, take agriculture is India's largest private sector, and it is still under license Raj because, whether you grow anything, the government can impose restrictions on import, exports, whatever.
No, but let's be fair. This government tried. To be fair to the Narendra Modi government, this government tried to bring in those farm laws. Questions could be raised about the manner in which they were sought to be pushed through, and that's part of the problem. How do you build consensus in India? How do you get every state on board?
We've got R. Mukundan joining us, Managing Director and Chief Executive at Tata Chemicals, also Vice President this year of CII. Mr. Mukundan, welcome. Your thoughts in terms of your expectations, just a few minutes to go before Finance Minister Sitharaman starts speaking on what she should be trying to do to try and get the economy to grow faster than 7%, which is the bare minimum. We need to grow at 8% plus in terms of real GDP numbers to be able to achieve our target of being a Viksit Bharat by 2047. What can the Finance Minister do to spur growth?
वो सर ईमानदार होते वो दे देते उसमें से लेकिन वो जरूर देते लेकिन उनका जाके उनके सपोर्ट
Okay, give me a moment as I try and fix that connection with Mr. Mukundan. But that really is the central question. Shankar Iyer, the fact that the Chief Economic Advisor, he's there in those images right outside Parliament, he's predicting growth between 6.3 to 6. What I can't understand is why are we assuming that this is the rate at which we'll grow next year and not trying to push for harder and more?
So I think some of it is recognition of the geopolitical challenges, and some of it, I think, is the despondency in the system about the drift of reforms. So there is a sense of drift in government on economic policy. because the low-hanging fruit was knocked off in 1991. And then we have had subsequent crises. You know, the FDI opening up was after the sanctions of Pokhran test. The other reforms came following the 2013 taper tantrum thing. Now we are at a place where your structural fundamental issues are you're facing very fundamental issues for growth. And that has to be addressed in some surgery or the other. So the government, if it produces a document or a plan which is credible of growth, about growth, that might sort of spur you to sort of think that, okay, I have hope ahead.
Okay, Rajiv Memani joins us. Mr. Memani, you know, we're brainstorming what can be done to try and boost growth from that 6.3, 6.8 level to higher. Can you give our viewers a sense with just a few minutes to go on what the finance minister should do to try and push the pedal on growth? Okay, I have an audio connection issue with that. Just a couple of minutes left before Rajdeep, the budget speech really starts. And we've just heard from the Prime Minister's office that there's he had a briefing, during the cabinet briefing. He's talking about, how this budget is going to be pro-farmers, pro-poor, pro-females and pro-the youth. Those, he says, are his key expectations. That's the message he's given in that cabinet briefing.
Every Prime Minister says it. Which class is he left out? If I put middle class, I put poor, I put all the key. But I saw a word there, Aam Aadmi budget.
R. Mukundan is now with us. We have just a couple of minutes to go, Mr. Mukundan, before the budget starts. We're asking you about how the finance minister can possibly boost growth beyond where the CA thinks we may end up next year.
I think the key issue which we have to address is to look at the 60% of our economy, which is consumption, and 11 is investment. How do you link the two? I think we need to boost a bit of consumption, and that has got to come through some tweaks in the slabs and putting more money in the hands of the people. I'm pretty sure there is something in it for the taxpayers, at least the individual taxpayers, who maybe in the lower end of the slabs. But I think at the other end of the day, that will spur demand, that will also spur investment, and I think there will be an impetus given to investment. In terms of the various other allocations which are done in budget in terms of boosting the productivity in various sectors, I think the CA has laid out sectorally what needs to happen in agriculture, what needs to happen in manufacturing, and what needs to happen in service sector. I think there will be something in it for each one of them. In addition to that, he's also highlighted we have to go sector by sector, and many of the action needs to be done at the state level. For example, in manufacturing, he has taken the example of Tamil Nadu and footwear industry, what they have done to spur the investment in that sector. So I think the solution is going to be the big picture, some thrust in consumption, some thrust in investment, coupled with some reforms which will be carried on, not just in 1 year, but over a course of next 3-4 years. We have also been highlighting that we need to look at jobs, skills and MSME together as one big, let's say, holistic picture, because MSMEs create jobs, and jobs need skilled people, and I think we need to look at this in one single way. And I think there'll be something for MSME, something for skilling, and that will spur the momentum towards jobs and also towards more higher paying jobs. That really probably is going to be the framework of the budget. This budget is going to be the next step in moving forward towards Viksit Bharat.
Rajiv Memani joins us. He heads up Ernst & Young in India as the president designate this year of CII. Mr. Memani, the gap between the Chief Economic Advisor's prediction for growth next year and what we need to be Viksit Bharat by 2047, which is 8% real GDP growth. What do you think the finance minister should really say in a couple of minutes from now to try and bridge that gap?
Yeah, I would say that's a longer term. Not all of that gets covered in the budget, but Rahul, I do hope it's a pro-growth budget, which means a very clear laid out, greater thrust on some strategic areas for expenditure, including capex and other things. Some space created for, in terms of personal tax relief, especially for lower to middle income people, to spur consumption. more aggressive path on disinvestment so that it gives the capital, so the fiscal glide path is maintained, but it gives the capital to allocate towards capex and also to provide some relief, which will lead to consumption. And also a very well laid out path on some strategic areas of reforms, whether it is for production-linked incentives for the labor-intensive industries, things on skilling, which are very important, agriculture and sustainability. I think a lot of the longer-term pieces will come through if we are able to execute on the reforms and the initiatives that are laid out in the budget.
So we'll come back, Mr. Memani, for more after the budget speech is over. Om Birla, Rajdeep just walking in. Finance Minister Sitharaman in a few seconds will start presenting her budget.
That's right. 8th consecutive budget. We can go back in time to finance ministers over the years who presented more than half a dozen budgets and their names stand out. The likes of Morarji Desai, Yashwant Sinha, P. Chidambaram are the three that stand out, and Nirmala Sitharaman is in that constellation, presenting her 8th consecutive budget. Expect the opposition to make the odd noise, but by and large, it should be relatively peaceful.
And Rajiv Memani at Ernst & Young was speaking about disinvestment. It will be interesting to see if the finance minister talks about that in the budget. It's not been a priority for a couple of years, but if the PM is serious about, getting out of the way, government having no business with being in business, we'll find out soon enough if they'll walk the talk.
अखिलेश जी, आपने संसद की मर्यादा को आप बना के रखे हैं। कभी बजट भाषण के अंदर इस तरीके का नहीं हुआ। ये उचित नहीं है, ये उचित नहीं है। अखिलेश जी प्लीज, मैं आपको मौका दूंगा राज्यपाल अभिभाषण पे, प्लीज। नो, ये तरीका ठीक नहीं है। राज्यपाल अभिभाषण पर चर्चा होगी। नौ तरीका।
Honorable Speaker, I present the budget for 25-26. This budget continues our government's efforts to A. Accelerate growth, B. Secure inclusive development, C. Invigorate private sector investments, D. Uplift household sentiments, and E. Enhance spending power of India's rising middle class. Together, we embark on a journey to unlock our nation's tremendous potential for greater prosperity and global positioning under the leadership of Honorable Prime Minister Shri Narendra Modi. As we complete the first quarter of the 21st century, continuing geopolitical headwinds suggest lower global economic growth over the medium term. However, our aspiration for a Vikasit Bharat inspires us, and the transformative work we have done during our government's first 2 terms guides us to march forward resolutely. Our economy is the fastest growing among all major economies. Our development track record for the past 10 years and structural reforms have drawn global attention. Confidence in India's capability and potential has only grown in this period. We see the next 5 years as a unique opportunity to realize Sabka Vikas, stimulating balanced growth of all regions. The great Telugu poet and playwright Gurujada Apparao had said, "Deshamante matti kadoy, deshamante manushuloy," meaning a country is not just its soil, a country is its people. In line with this, for us, Vikasit Bharat encompasses zero poverty, 100% quality good school education, access to high quality, affordable and comprehensive health care, 100% skilled labor with meaningful employment, 70% women in economic activities, and farmers making our country the food basket of the world. In this budget, the proposed development measures span 10 broad areas focusing on Garib, youth, Annadata and Nari, spurring agricultural growth and productivity, building rural prosperity and resilience, taking everyone together on an inclusive growth path, boosting manufacturing and furthering Make in India, supporting MSMEs, enabling employment-led development, investing in people, economy and innovation, securing energy supplies, promoting exports and nurturing innovation. For this journey of development, our four powerful engines are agriculture, MSME, investments and exports. The fuel, our reforms, our guiding spirit, inclusivity, and the destination, Vikasit Bharat. This budget aims to initiate transformative reforms across 6 domains. During the first 5 years, these will augment our growth potential and global competitiveness. The domains are taxation, power sector, urban development, mining, financial sector, and regulatory reforms. Agriculture as the first engine. Now I move to specific proposals, beginning with agriculture as the first engine. Prime Minister Dhan Dhanya Krishi Yojana, developing agri-districts program. Motivated by the success of the aspirational district program, our government will undertake a Prime Minister Dhan Dhanya Krishi Yojana in partnership with states. Through the convergence of existing schemes and specialized measures, the program will cover 100 districts with low productivity, moderate crop intensity, and below average credit parameters. It aims to 1. Enhance agricultural productivity, 2. Adopt crop diversification and sustainable agricultural practices, 3. Augment post-harvest storage at the panchayat and block level, 4. Improve irrigation facilities, and 5. Facilitate availability of long-term and short-term credit. This program is likely to help 1.7 crore farmers. Building rural prosperity and resilience. A comprehensive multi-sectoral rural prosperity and resilience program will be launched in partnership with the states. This will address underemployment in agriculture through skilling, investment, technology, and invigorating the rural economy. The goal is to generate ample opportunities in rural areas so that migration is an option but not a necessity. The program will focus on rural women, young farmers, rural youth, marginal and small farmers, and landless families. The details are in Annexure A. Domestic best practices will be incorporated, and appropriate technical and financial assistance will be sought from multilateral development banks. In phase 1, 100 developing agri-districts will be covered. Atmanirbharta in pulses. Our government is implementing the National Mission for Edible Oil Seed for achieving Atmanirbharta in edible oils. Our farmers have the capability to grow enough for our needs and more. 10 years ago, we made concerted efforts and succeeded in achieving near self-sufficiency in pulses. Farmers responded to the need by increasing the cultivated area by 50%, and government arranged for procurement and remunerative prices. Since then, with rising incomes and better affordability, our consumption of pulses has increased significantly. Our government will now launch a 6-year mission for Atmanirbharta in pulses with a special focus on Tuar, Urad and Masoor. Details are in Annexure B. Central agencies such as NAFED and NCCF will be ready to procure these 3 pulses as much as offered during the next 4 years from farmers who register with these agencies and enter into agreements. Comprehensive program for vegetables and fruits. It is encouraging that our people are increasingly becoming aware of their nutritional needs. It is a sign of a society becoming healthier. With rising income levels, the consumption of vegetables, fruits, and Sri Anna is increasing significantly. A comprehensive program to promote production, efficient supplies, processing, and remunerative prices for farmers will be launched in partnership with the states. Appropriate institutional mechanisms for implementation and participation of farmer producer organizations and cooperatives will be set up. Makhana board in Bihar. For this, there is a special opportunity for the people of Bihar. A Makhana board will be established in the state to improve production, processing, value addition, and marketing of Makhana. The people engaged in these activities will be organized into FPOs. The board will provide hand-holding and training support to Makhana farmers and will also work to ensure they receive the benefits of all relevant government schemes. A national mission on high-yielding seeds will be launched, aimed at 1. Strengthening research ecosystem, 2. Targeted development and propagation of seeds with high yield, pest resistance, and climate resilience, and 3. Commercial availability of more than 100 seed varieties released since July 2024. India ranks second largest globally in fish production and aquaculture. Seafood exports are valued at 60,000 crore rupees. To unlock the untapped potential of the marine sector, our government will bring in an enabling framework for sustainable harnessing of fisheries from Indian Exclusive Economic Zone and high seas, with a special focus on the Andaman and Nicobar and Lakshadweep Islands. For the benefit of lakhs of cotton growing farmers, I am pleased to announce a mission for cotton productivity. This 5-year mission will facilitate significant improvements in productivity and sustainability of cotton farming and promote extra long staple cotton varieties. The best of science and technology support will be provided to farmers. Aligned with our integrated 5F vision for the textile sector, this will help in increasing incomes of the farmers and ensure a steady supply of quality cotton for rejuvenating India's traditional textile sector. Kisan credit cards facilitate short-term loans for 7.7 crore farmers, fishermen, and dairy farmers. The loan limit under modified interest subvention scheme will be enhanced from 3 lakh rupees to 5 lakh rupees for loans taken through the KCC. For Atmanirbharta in urea production, our government had reopened 3 dormant urea plants in the eastern region. To further augment urea supply, a plant with annual capacity of 12.7 lakh metric tons will be set up at Namrup in Assam. India Post, with 1.5 lakh rural post offices, complemented by the India Post Payment Bank and a vast network of 2.4 lakh Dak Sevaks, will be repositioned to act as a catalyst for the rural economy. Details are at Annexure C. India Post will also be transformed as a large public logistics organization. This will meet the rising needs of Vishwakarmas, new entrepreneurs, women, self-help groups, MSMEs, and the large business organizations. Our government will provide support to NCDC for its lending operations for the cooperative sector. MSMEs as the second engine. Now I move to MSMEs as the second engine, which encompasses manufacturing and services with a focus on MSMEs numbering 5.7 crores. Currently, over 1 crore registered MSMEs, employing 7.5 crore people and generating 36% of our manufacturing, have come together to position India as a global manufacturing hub. With their quality products, these MSMEs are responsible for 45% of our exports. To help them achieve higher efficiencies of scale, technological upgradation, and better access to capital, the investment and turnover limits for classification of all MSMEs will be enhanced to 2.5 and 2 times respectively. This will give them the confidence to grow and generate employment for our youth. The details are given in Annexure D. To improve access to credit, the credit guarantee cover will be enhanced. First, for micro and small enterprises from 5 crore to 10 crore rupees, leading to additional credit of 1.5 lakh crores in the next 5 years. Second, for startups from 10 crore rupees to 20 crore rupees, with the guarantee fee being moderated to 1% for loans in 27 focus sectors which are important for Atmanirbhar Bharat. And for well-run exporter MSMEs, for term loans up to 20 crore rupees. Also for the micro enterprises, we will introduce customized credit cards with a 5 lakh rupee limit for micro enterprises registered on Udyam portal. In the first year, 10 lakh such cards will be issued. Fund of funds for startups. The Alternate Investment Fund, AIFs, for startups have received commitments of more than 91,000 crores rupees. These are supported by the Fund of Funds set up with the Government of India's contribution of 10,000 crore rupees. Now, a new fund of funds with expanded scope and a fresh contribution of another 10,000 crore rupees will be set up. A new scheme will be launched for 5 lakh women, scheduled castes and scheduled tribes, first-time entrepreneurs. This will provide term loans up to 2 crore rupees during the next 5 years. The scheme will incorporate lessons from the successful Stand Up India scheme. Online capacity building for entrepreneurship and managerial skills will also be organized. Measures for labor-intensive sectors. To promote employment and entrepreneurship opportunities in labor-intensive sectors, our government will undertake specific policy and facilitation measures. To enhance the productivity, quality, and competitiveness of India's footwear and leather sector, a focused product scheme will be implemented. The scheme will support design capacity, component manufacturing, and machinery required for production of non-leather quality footwear, besides the support for leather footwear and products. The scheme is expected to facilitate employment for 22 lakh persons, generate over 4 lakh crore rupees, and exports of over 1.1 lakh crore rupees. Measures for the toys sector. Building on the National Action Plan for Toys, we will implement a scheme to make India a global hub for toys. The scheme will focus on development of clusters, skills, and a manufacturing ecosystem that will create high quality, unique, innovative, and sustainable toys that will represent the Made in India brand. Support for food processing. In line with our commitment towards Purvodaya, we will establish a National Institute of Food Technology, Entrepreneurship and Management in Bihar. The institute will provide a strong fillip to food processing activities in the entire eastern region. This will result in 1. Enhanced income for the farmers through value addition to their produce, and 2. Skilling entrepreneurship and employment opportunities for the youth. Manufacturing mission, furthering Make in India. Our government will set up a national manufacturing mission covering small, medium, and large industries for furthering Make in India by providing policy support, execution roadmaps, governance, and monitoring framework for central ministries and states. Details are in Annexure E. Given our commitment to climate-friendly development, the mission will also support clean tech manufacturing. This will aim to improve domestic value addition and build our ecosystem for solar PV cells, EV batteries, motors and controllers, electrolyzers, wind turbines, very high voltage transmission equipment, and grid-scale batteries. Investment as the third engine. Now I move to investment as the third engine, which encompasses investing in people, investing in the economy, and investing in innovation. Investing in people. Saksham Anganwadi and Poshan 2.0. Saksham Anganwadi and Poshan 2.0 program provides nutritional support to more than 8 crore children, 1 crore pregnant women and lactating mothers all over the country, and about 20 lakh adolescent girls in aspirational districts and the Northeast region. The cost norms for these nutritional support will be enhanced appropriately. Atal Tinkering Labs. 50,000 Atal Tinkering Labs will be set up in government schools in the next 5 years to cultivate the spirit of curiosity and innovation and foster a scientific temper among young minds. Broadband connectivity to government secondary schools and PHCs. Broadband connectivity will be provided to all government secondary schools and primary health centers in rural areas under the BharatNet project. Bharatiya Bhasha Pustak Scheme. We propose to implement a Bharatiya Bhasha Pustak scheme to provide digital form Indian language books for schools and for higher education. This aims to help students understand their subjects better and in their language. National Centers of Excellence for Skilling. The initiative announced in the July 24 budget. 5 national centers of excellence for skilling will be set up with global expertise and partnerships to equip our youth with the skills required for Make for India, Make for the World manufacturing. The partnership will cover curriculum design, training of trainers, and a skills certification framework and periodic reviews. Expansion of capacity in IITs. Total number of students in 23 IITs has increased 100% from 65,000 to 1.35 lakh in the past 10 years. Additional infrastructure will be created in the 5 IITs started after 2014 to facilitate education for 6,500 more students. Hostel and other infrastructure capacity at IIT Patna will also be expanded. Center of Excellence. Center of Excellence in AI for Education. I had announced 3 centers of excellence in artificial intelligence for agriculture, health, and sustainable cities in 2023. Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores. Expansion of medical education. Our government has added almost 1.1 lakh undergraduate and postgraduate medical education seats in 10 years, an increase of 130%. In the next year, 10,000 additional seats will be added in medical colleges and hospitals towards the goal of adding 75,000 seats in the next 5 years. Daycare cancer centers in all district hospitals. Our government will facilitate setting up of daycare cancer centers in all district hospitals in the next 3 years. 200 centers will be established in 25-26 itself. Strengthening urban livelihoods. Our government has been giving priority to assisting urban poor and vulnerable groups. A scheme for socio-economic upliftment of urban workers will be implemented to help them improve their incomes, have sustainable livelihoods, and a better quality of life. PM Swanidhi scheme has benefited more than 68 lakh street vendors, giving them respite from high-interest informal sector loans. Building on this success, the scheme will be revamped with enhanced loans from banks, UPI-linked credit cards with 30,000 rupees limit, and capacity building support. Social Security Scheme for welfare of online platform workers. Gig workers of online platforms provide dynamism to the new age services economy. Recognizing their contribution, our government will arrange for their identity cards and registration on the e-Shram portal. They will be provided health care under PM Jan Arogya Yojana. This measure is likely to assist nearly 1 crore gig workers. Investing in the economy. Public-private partnership in infrastructure. Each infrastructure-related ministry will come up with a 3-year pipeline of projects that can be implemented in PPP mode. States will also be encouraged to do so and can seek support from the India Infrastructure Project Development Fund, which is a scheme to prepare PPP proposals. Support to states for infrastructure. An outlay of 1.5 lakh crore is proposed for the 50-year interest-free loans to states for capital expenditure and incentives for reforms. Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects. Regulatory and fiscal measures will be fine-tuned to support the plan. Jal Jeevan Mission. Since 2019, 15 crore households, representing 80% of India's rural population, have been provided access to portable tap water connections. To achieve 100% coverage, I am pleased to announce the extension of this mission until 2028 with an enhanced total outlay. The mission's focus will be on the quality of infrastructure and O&M of rural piped water supply, schemes through Jan Bhagidari. A separate MOU or separate MOUs will be signed with the states and union territories to ensure sustainability and citizen-centric water services delivery. Urban sector reforms. Building on the July budget proposals, urban sector reforms related to governance, municipal services, urban land and planning will be incentivized. Urban Challenge Fund. The government will set up an Urban Challenge Fund of 1 lakh crore rupees to implement the proposals for cities as growth hubs, creative redevelopment of cities, and for water and sanitation purposes announced in the July budget. This fund will finance up to 25% of the cost of bankable projects, with a stipulation that at least 50% of the cost is funded from bonds, bank loans, and PPPs. An allocation of 10,000 crore is proposed in 2025-26. Power sector reforms. We will incentivize electricity distribution reforms and augmentation of intra-state transmission capacity by states. This will improve financial health and capacity of electricity companies. Additional borrowing of 0.5% of GSDP will be allowed to states contingent on these reforms. Nuclear energy mission for Vikasit Bharat. Development of at least 100 gigawatt of nuclear energy by 2047 is essential for our energy transition efforts. For an active partnership with the private sector towards this goal, amendments to the Atomic Energy Act and the Civil Liability for Nuclear Damage Act will be taken up. A nuclear energy mission for research and development of small modular reactors with an outlay of 20,000 crore will be set up. At least 5 indigenously developed small modular reactors will be operationalized by 2033. Shipbuilding. The shipbuilding financial assistance policy will be revamped to address cost disadvantages. This will also include credit notes for shipbreaking in Indian yards to promote the circular economy. Large ships above a specified size will be included in the infrastructure harmonized master list. Shipbuilding clusters will be facilitated to increase the range, categories, and capacity of ships. This will include additional infrastructure, facilities, skilling, and technology to develop the entire ecosystem. Maritime Development Fund. For long-term financing for the maritime industry, a Maritime Development Fund with a corpus of 25,000 crore rupees will be set up. This will be for distributed support and promoting competition. This will have up to 49% contribution by the government, and the balance will be mobilized from ports and from private sector. UDAN regional connectivity schemes. UDAN has enabled 1.5 crore middle-class people to meet their aspirations for speedier travel. The scheme has connected 88 airports, and operationalized 619 routes. Inspired by that success, a modified UDAN scheme will be launched to enhance regional connectivity to 120 new destinations and carry 4 crore passengers in the next 10 years. 4 crore additional passengers in the next 10 years. The scheme will also support helipads and smaller airports in hilly, aspirational, and northeast regional districts. Greenfield airports will be facilitated in Bihar to meet the future needs of the state. These will be in addition to the expansion of the capacity of Patna Airport and a brownfield airport in Beta. Western Kosi Canal project in Mithilanchal. Financial support will be provided for the Western Kosi Canal ERM project, benefiting a large number of farmers, cultivating over 50,000 hectares of land in the Mithilanchal region of Bihar. Mining sector reforms, including those for minor minerals, will be encouraged through sharing of best practices and institutions of a state mining index. A policy for recovery of critical minerals from tailings will be brought out. Under the special window for affordable and mid-income housing, Swami, 50,000 dwelling units in stressed housing projects have been completed and keys handed over to home buyers. Another 40,000 units will be completed in 2025, further helping middle-class families who were paying EMIs on loans taken for apartments while also paying rent for their current dwellings. Building on this success, Swami Fund 2 will be established as a blended finance facility with contribution from the government, banks, and private investors. This fund of 15,000 crore rupees will aim for expeditious completion of another 1 lakh units. PM Gati Shakti data for private sector. For furthering PPPs and assisting the private sector in project planning, access to relevant data and maps from the PM Gati Shakti portal will be provided. Tourism for employment-led growth. Top 50 tourist destination sites in the country will be developed in partnership with states through a challenge mode. Land for building key infrastructure will have to be provided by the states. Hotels in these destinations will be included in the infrastructure harmonized list. The following measures will be taken for facilitating employment-led growth. Organizing intensive skill development programs for our youth, including in institutes of hospitality management. Providing mudra loans for homestays. Improving ease of travel and connectivity to tourist destinations. Providing performance-linked incentives to states for effective destination management, including tourist amenities, cleanliness, and marketing efforts. And introducing streamlined e-visa facilities along with visa fee waivers for certain tourist groups. Continuing with the emphasis on places of spiritual and religious significance in the July budget, there will be a special focus on destinations related to the life and times of Lord Buddha. Medical tourism and heal in India. Medical tourism and heal in India will be promoted in partnership with the private sector along with capacity building and easier visa norms. Investing in innovation. To implement private sector-driven research, development, and innovation initiatives announced in the July budget, I am now allocating 20,000 crore rupees for this purpose. A deep tech fund of funds will also be explored to catalyze the next generation startups as a part of this initiative. In the next 5 years, under the PM Research Fellowship Scheme, we will provide 10,000 fellowships for technological research in IITs and IISc with enhanced financial support. The second gene bank with 10 lakh germplasm lines will be set up for future food and nutritional security. This will provide conservation support to both public and private sectors for genetic resources. We will start a national geospatial mission to develop foundational geospatial infrastructure and data. Using PM Gati Shakti, this mission will facilitate modernization of land records, urban planning, and design of infrastructure projects. A Gyan Bharatam mission for survey, documentation, and conservation of our manuscript heritage with academic institutions, museums, libraries, and private collectors will be undertaken to cover more than 1 crore manuscripts. We will set up a national digital repository of Indian knowledge systems for knowledge sharing. Now I move to exports as the fourth engine. We will set up an export promotion mission with sectoral and ministerial targets driven jointly by the Ministries of Commerce, MSME, and Finance. It will facilitate easy access to export credit, cross-border factoring support, support to MSMEs to tackle non-tariff measures in overseas markets. A digital public infrastructure, Bharat Trade Net, for international trade will be set up as a unified platform for trade documentation and financing solutions. This will complement the Unified Logistics Interface platform. The BTN will be aligned with international practices. Support will be provided to develop domestic manufacturing capacities for our economy's integration with global supply chains. Sectors will be identified based on objective criteria. Facilitation groups with participation of senior officers and industry representatives will be formed for select products and supply chains. Through this, there are huge opportunities related to Industry 4.0, which needs high skills and talent. Our youth have both. Our government will support the domestic electronic equipment industry to leverage this opportunity for the benefit of our youth. A national framework will be formulated as guidance to states for promoting global capability centers in emerging Tier 2 cities. This will suggest measures for enhancing availability of talent and infrastructure, building bylaw reforms, and mechanisms for collaboration with industry. Our government will facilitate upgradation of infrastructure and warehousing for air cargo, including high-value perishable horticultural produce. Cargo screening and customs protocol will be streamlined and made user-friendly. Reforms as the fuel. Over the past 10 years, our government has implemented several reforms for convenience of taxpayers, such as faceless assessment, 2, taxpayer charter, 3, faster returns, 4, almost 99% returns being on self-assessment, and 5, Vivad Se Vishwas scheme. Continuing these efforts, I reaffirm the commitment of the Tax Department to trust first, scrutinize later. I also propose to introduce the new income tax bill next week. I will detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score Framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating. Requirements and procedures for speedy approval of company mergers will be rationalized. The scope for fast-track mergers will also be widened and the process made simpler. As proposed in the interim budget, we signed bilateral investment treaties with 2 countries in 2024 to encourage sustained foreign investment, and in the spirit of First Develop India, the current model BIT will be revamped and made more investor-friendly. In the last 10 years, in several aspects, including financial and non-financial, our government has demonstrated a steadfast commitment to ease of doing business. We are determined to ensure that our regulations must keep up with technological innovations and global policy developments. A light-touch regulatory framework based on principles and trust will unleash productivity and employment. Through this framework, we will update regulations that were made under old laws. To develop this modern, flexible, people-friendly, and trust-based regulatory framework appropriate for the 21st century, I propose 4 specific measures. A high-level committee for regulatory reforms will be set up for a review of all non-financial sector regulations, certifications, licenses, and permissions. The committee will be expected to make recommendations within a year. The objective is to strengthen trust-based economic governance and take transformational measures to enhance ease of doing business, especially in matters of inspection and compliances. States will be encouraged to join in this endeavor. An investment friendliness index of states will be launched in 2025 to further the spirit of competitive, cooperative federalism. Under the Financial Stability and Development Council, a mechanism will be set up to evaluate impact of the current financial regulations and subsidiary instructions. It will also formulate a framework to enhance their responsiveness and development of the financial sector. In the Jan Vishwas Act 2023, more than 180 legal provisions were decriminalized. Our government will now bring up the Jan Vishwas Bill 2.0 to decriminalize more than 100 provisions in various laws. I now move to fiscal policy. In the July budget, I had committed to staying the course for fiscal consolidation. Our endeavor will be to keep the fiscal deficit each year such that central government debt remains on a declining path as a percentage of the GDP. The roadmap for the next 6 years has been detailed in the FRBM statement. Revised estimates for 2024-25. The revised estimate of the total receipts other than borrowings is 31.47 lakh crore rupees, of which the net tax receipts are 25.57 lakh crore rupees. The revised estimate of the total expenditure is 47.16 lakh crore rupees, of which the capital expenditure is about 10.18 lakh crore rupees. The revised estimate of the fiscal deficit is 4.8% of the GDP. Budget estimates for 25-26. Coming to 25-26, the total receipts other than borrowings and total expenditure are estimated at 34.96 lakh crore rupees and 50.65 lakh crore rupees respectively. The net tax receipts are estimated at 28.37 lakh crore rupees. The fiscal deficit is estimated to be 4.4% of GDP. To finance the fiscal deficit, the net market borrowings from dated securities are estimated at 11.54 lakh crore. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 14.82 lakh crore rupees. I will now move to Part B. Indirect taxes. My proposals relating to customs aim to rationalize tariff structure and address duty inversion. These will also support domestic manufacturing and value addition, promote exports, facilitate trade, and provide relief to common people. Rationalization of customs tariff structure for industrial goods. As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate. 2. Apply appropriate cess to broadly maintain effective duty incidence, except on a few items where such incidence will reduce marginally. 3. Levy not more than 1 cess or surcharge. Therefore, I propose to exempt social welfare surcharge on 82 tariff lines that are subject to a cess. I shall now take up sector-specific proposals. To provide relief to patients, particularly those suffering from cancer, rare diseases, and other severe chronic diseases, I propose to add 36 life-saving drugs and medicines to the list of medicines fully exempted from basic custom duty. I also propose to add 6 life-saving medicines to the list attracting concessional custom duty of 5%. Full exemption and concessional duty will also respectively apply on the bulk drugs for manufacture of the above. Specified drugs and medicines under patient assistance programs run by the pharmaceutical companies are fully exempt from BCD, provided the medicines are supplied free of cost to the patients. I propose to add 37 more medicines along with 13 new patient assistance programs. Support to domestic manufacturing and value addition. Critical minerals. In the July 2024 budget, I had fully exempted BCD on 25 critical minerals that are not domestically available. I had also reduced BCD of 2 other such minerals to provide a major fillip to their processing, especially by MSMEs. Now, I propose to fully exempt cobalt powder and waste, the scrap of lithium-ion battery, lead, zinc, and 12 more critical minerals. This will help secure the availability for manufacturing in India and promote more jobs for our youth. To promote domestic production of technical textile products such as agro-textiles, medical textiles, and geotextiles at competitive prices, I propose to add 2 more types of shuttle-less looms to the list of fully exempted textile machinery. I also propose to revise the BCD rate on knitted fabrics covered by 9 tariff lines from 10 or 20 to 20% or 115 rupees per kg, whichever is higher. Electronic goods. In line with our Make in India policy and to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20% and reduce the BCD to 5% on open cell and other components. In 23-24 budget, for the manufacture of open cells of LCD, LED TVs, I had reduced the BCD on parts of open cells from 5% to 2.5%. To further boost the manufacture of such open cells, the BCD on these parts will now stand exempted. Lithium-ion battery. To the list of exempted capital goods, I propose to add 35 additional capital goods for EV battery manufacturing and 28 additional capital goods for mobile phone battery manufacturing. This will boost domestic manufacture of lithium-ion batteries, both for mobile phones and for electric vehicles. Shipping sector. Considering that shipbuilding has a long gestation period, I propose to continue the exemption of BCD on raw materials, components, consumables, or parts for the manufacture of ships for another 10 years. I also propose the same dispensation for shipbreaking to make it more competitive. Telecommunication. To prevent classification disputes, I propose to reduce the BCD from 20% to 10% on carrier-grade Ethernet switches to make it at par with non-carrier-grade Ethernet switches. Export promotion. To facilitate exports of handicrafts, I propose to extend the time period for export from 6 months to 1 year, further extendable by another 3 months if required. I also propose to add 9 items to the list of duty-free inputs. Leather sector. I propose to fully exempt BCD on wet blue leather to facilitate imports for domestic value addition and employment. I also propose to exempt crust leather from 20% export duty to facilitate exports by small tanners. Marine products. To enhance India's competitiveness in the global seafood market, I propose to reduce BCD from 30% to 5% on frozen fish paste, surimi, for manufacture and export of its analog products. I also propose to reduce BCD from 15% to 5% on fish hydrolysates for manufacture of fish and shrimp feed. In July 2024 budget, to promote development of domestic MROs for aircraft and ships, I had extended the time limit for export of foreign origin goods that were imported for repairs from 6 months to 1 year and further extendable by 1 year. I now propose to extend the same dispensation for railway goods. Time limit for provisional assessment. Presently, the Customs Act 1962 does not provide any time limit to finalize provisional assessments, leading to uncertainty and cost to trade. As a measure of promoting ease of doing business, I propose to fix a time limit of 2 years, extendable by a year, for finalizing the provisional assessment. I propose to introduce a new provision that will enable importers or exporters, after clearance of goods, to voluntarily declare material facts and pay duty with interest but without penalty. This will incentivize voluntary compliance. However, this will not apply in cases where department has already initiated audit or investigation proceedings. For industry to better plan their imports, I propose to extend the time limit for the end use of imported inputs in the relevant rules from 6 months to 1 year. This will provide operational flexibility in view of cost and uncertainty of supply. Further, such importers will now have to file only quarterly statements instead of a monthly statement. I now come to my direct tax proposals. In Part A, I have briefly underlined taxation reforms as one of key reforms to realize our vision of Vikasit Bharat. In respect of criminal law, our government had earlier ushered in Bharatiya Nyaya Sanhita, replacing Bharatiya Danda Sanhita. I am happy to inform this august House and the country that for new income tax bill will carry forward the same spirit of Nyaya in its drafting as well. The new bill will be clear and direct in text, with close to half of the present law in terms of both chapters and words. It will be simple to understand for taxpayers and tax administrators, leading to tax certainty and reduced litigation. Reforms, however, are not a destination. They are means to achieve good governance for our people and economy. Providing good governance primarily involves being responsive. The Tirukural captures this in verse 542, which reads, "Vaanokki vaazhum ulagallam, mannavan kol nokki vaazhum kudi," meaning, just as the living beings live expecting rains, citizens live expecting good governance. Our government is committed to keeping an ear to the ground and a finger on the pulse and responding while balancing our national building efforts. The following measures will detail just how our government will, under the guidance of PM Modi, has taken steps to understand and address. I repeat that sentence, sir. The following measures will detail just how our government, under the guidance of PM Modi, has taken steps to understand and address the needs voiced by our citizens. My tax proposals are guided by this spirit. The objectives of my proposals are as follows. Personal income tax reforms with special focus on middle class. Rationalization of TDS and TCS for easing difficulties. Encouraging voluntary compliance. Reducing compliance burden. Ease of doing business. Employment and investment. I will come to my proposal on personal income tax towards the end. TDS and TCS, rationalization for easing difficulties. I propose to rationalize tax deduction at source, TDS, by reducing the number of rates and thresholds above which TDS is deducted. Further, threshold amounts for tax deduction will be increased for better clarity and uniformity. The limit for tax deduction on interest for senior citizens is being doubled from the present 50,000 rupees to 1 lakh rupees. Similarly, the annual limit of 2.40 lakh rupees for TDS on rent is being increased to 6 lakh rupees. This will reduce the number of transactions liable to TDS, thus benefiting small taxpayers receiving small payments. The threshold to collect tax at source, the TCS, on remittances under RBI's liberalized remittance scheme, the LRS, is proposed to be increased from 7 lakh to 10 lakhs. I also propose to remove TCS on remittances for education purposes, where such remittances is out of a loan taken from a specified financial institution. Both TDS and TCS are being applied on any transaction related to sale of goods. To prevent such compliance difficulties, I propose to omit the TCS. I also propose that the provisions of the higher TDS deduction will now apply only in non-PAN cases. In July 2024, the delay for payment of TDS up to the due date of filing statement was decriminalized. I propose to provide the same relaxation to TCS provisions as well. The government under the leadership of Prime Minister Modi believes in Sabka Saath, Sabka Vikas, Sabka Vishwas, and Sabka Prayas. In line with this, we brought in updated return facility in 2022 for voluntary compliance by taxpayers who had omitted to report their correct income. Our trust in taxpayers was proved right. Nearly 90 lakh taxpayers voluntarily updated their incomes by paying additional tax. Taking this trust further, I now propose to extend the time limit to file updated returns for any assessment year from the current limit of 2 years to 4 years. I propose to reduce the compliance burden for small charitable trusts and institutions by increasing their period of registration from 5 years to 10 years. It is also proposed that disproportionate consequences do not arise for minor defaults, such as incomplete applications filed by charitable entities. Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. In my speech in July 2024, I had promised that all processes, including giving effect to appellate orders, shall be digitalized and made paperless over the next 2 years. So I'm happy to announce that digitalization is being made operational now. In July 2024, we brought in the Vivad Se Vishwas scheme to resolve income tax disputes pending in appeal. The scheme has received a great response, with nearly 33,000 taxpayers having availed of the scheme to settle their disputes. I have a few proposals to promote investment and employment. It is proposed to provide a presumptive taxation regime for non-residents who provide services to a resident company that is establishing or operating an electronics manufacturing facility. I further propose to introduce a safe harbor for tax certainty for non-residents who store components for supply to specified electronics manufacturing units. Presently, the tonnage tax scheme is available only to sea-going ships. The benefits of existing tonnage tax scheme are proposed to be extended to inland vessels registered under the Indian Vessels Act 2021 to promote inland water transport in the country. Extension for incorporation of startups. We continue to support the Indian startup ecosystem. I propose to extend the period of incorporation by 5 years to allow the benefit available to startups which are incorporated before 1/4/2030. In order to attract and promote additional activities in the IFSC, I am inter alia proposing specific benefits to ship leasing units, insurance offices, and treasury centers of global companies which are set up in IFSC. Further, to claim benefits, the cut-off date for commencement in IFSC has also been extended by 5 years to 31/3/2030. Category 1 and Category 2 AIFs are undertaking investments in infrastructure and other such sectors. I propose to provide certainty of taxation to these entities on the gains from securities, to promote funding from sovereign wealth funds and pension funds to the infrastructure sector. I propose to extend the date of making an investment by 5 more years up to 31st March 2030. Personal income tax reforms with special focus on middle class. Democracy, demography, and demand are the key support pillars in our journey towards Vikasit Bharat. The middle class provides strength for India's growth. This government, under the leadership of Prime Minister Modi, has always believed in the admirable energy and ability of the middle class in nation building. In recognition of their contribution, we have periodically reduced their tax burden. Right after 2014, the nil tax slab was raised to 2.5 lakhs of rupees, which was further raised to 5 lakh rupees in 2019 and to 7 lakh rupees in 2023. This is reflective of our government's trust on the middle class taxpayers. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. So, average income of 1 lakh per month, other than the special rate income such as capital gains, under the new regime. This limit will be 12.75 lakh for salaried taxpayers due to the standard deduction of 75,000. Slabs and rates are being changed across the board to benefit all taxpayers. The new structure will substantially reduce the taxes of the middle class and leave more money in their hands, boosting household consumption, savings, and investment. In the new tax regime, I propose to revise tax rate structures as follows: 0 to 4 lakh rupees nil, 4.8 lakh rupees to 4 to 8 lakh rupees 5%, 8 to 12 lakh rupees 10%, 12 to 16 lakh rupees 15%, 16 to 20 lakh rupees 20%, 20 to 24 lakh rupees 25%, and above 24 lakh rupees 30%. To taxpayers up to 12 lakh of normal income, other than special rate income such as capital gains. I read that again. To taxpayers up to 12 lakh of income, other than special rate income such as capital gains, tax rebate is being provided in addition to the benefit due to slab rate reduction in such a manner that there is no tax payable by them. The total tax benefit of slab rate changes and rebate at different income levels can be illustrated with a few examples. A taxpayer in the new regime with an income of 12 lakh rupees will get a benefit of 80,000 rupees in tax, which is 100% of tax payable as per the existing rates. A person having income of 18 lakh rupees will get a benefit of 70,000 rupees in tax. That is 30% of tax payable as per existing rates. A person with an income of 25 lakh gets a benefit of 1,10,000 rupees. That is 25% of his tax payable as per existing rates. Details of my tax proposals are given in the annexure. As a result of these proposals, Honorable Speaker, sir, revenue of about 1 lakh crore in direct taxes and 2,600 crores in indirect taxes will be foregone. Mr. Speaker, sir, with this, I commend the budget to this august House.
Item number 2, Srimati Nirmala Sitharaman.
Sir, with your permission, I rise to lay on the table the following statements under Section 3(1) of the Fiscal Responsibility and Budget Management Act 2003. Medium-term fiscal policy cum fiscal policy strategy statement and macroeconomic framework statement.